Good morning, traders. Good morning, good morning, good morning, good afternoon to some, maybe even good evening to some of you. Fantastic. I am so glad you are here. Traders, welcome to another master trading class. This is actually my second one. I held the first one last month and it was such a huge success. We had over 16,000 people registered for the first master trading class last month, and it was such a huge success with 16,000 registrants. We decided to hold another one. Actually, this is sort of more like part two, right? While this master class is going to be somewhat similar to the first one, there are some new things I'm throwing in and some slightly more advanced things I'd like to share with you as well. So I'm considering this part two. So if you enjoyed and experienced part one, you're going to take everything you've learned from part one to a different level in this event today over the next couple of hours. So I'm glad you're here. This one, like the first one, has broken the internet, if you will. We had over 24,000 registrants. Now, when I say registrants, that's not necessarily attendees. Usually in our experience, we have about 55% of all those who register attend these events. So with 24,000, that is substantially higher than our record-breaking 8,000 plus from last month. So we're moving up, thanks to you. Now we have people coming in from over 50 countries at last check. So we have a huge, huge audience. Now, before I get started with the course, I want you to understand, obviously, that this is absolutely free, but I don't want you to mistake the fact that it's free for being basic and filled with a lot of fluff. I don't do things like that, just so you know. I'm going to blow your mind. That is my objective here today, to blow your mind. I'm going to give you an event like you've never seen before. I'm going to take your level of market sophistication, your knowledge of how markets operate, your knowledge of how to identify opportunities in all markets, irrespective of time frame and irrespective of market. I'm going to take all of those things to new highs. And I'm willing to bet that if any of you have done courses or trainings with other outfits, other mentors, other gurus, I'm willing to bet that this event, free, will rival anything you've ever experienced in your life. All right, so I want to get started here. Just want to make sure that everyone's okay. I'd like to actually see your comments coming through if I can. I don't know if I can do that. Yeah, here we go. Uh-oh, there we go. So I want to give you some pointers. All right, I'm gonna give you some pointers before we get started here. I want you to take notes. I think notes are important, but I don't want you to take copious notes. I don't want you to take notes at such a frantic pace that you're missing the very next 2 or 3 points that I'm talking about because you're still note-taking on several points behind the moment. So you want to sort of keep a balance. You'll always be able to go back to this event and watch the recording. Now, the recorded event doesn't have the energy, quite the energy that the live one has. So you still want to note take. You still want to sort of take advantage of the energy that's in a live event, but not so copiously that you're falling behind, because this knowledge that I'm going to share with you is layered knowledge. So I have to give you the ground floor, then the first floor, then the second floor. I can't do that out of order. Okay, I can't give you the roof before I put the foundation into your home. So it's important that every single one of those layers every single one is fully understood by you. Because if you miss layer 2 and we're on to layer 5 already, then the benefit that you get from the higher levels will be greatly diminished. All right, so do some note taking, but not so copiously. You'll always be able to go back and fill out those notes. So do it in a more general way. I will do my best to take questions. A lot of times I get on such a roll that the questions become difficult, and especially if I don't really see them. That's going to be an issue. But don't worry. I can deal with your questions in the comments, and your questions after the event, if I don't happen to get to you, your questions after the event are going to be more powerful to you. They're going to be more meaningful to you because a lot of you ask questions that are going to be answered in the next 2 or 3 slides. Okay? So your questions after you've consumed everything actually are going to be more meaningful to you. So don't be overly concerned if you did not get a question answered. And I will do my very best to scroll through the comments over the next several days and make sure I get the most important of those questions answered for you, okay? So what I want to do here is get us started, okay? Now, there are a tremendous amount of people here I know who have absolutely no idea who I am. So before I delve into the educational content, I'm asking all those who know exactly who I am and have known me for years, if not decades, to bear with me as I go through some introductory things that are absolutely necessary for those who have no idea who I am. But once again, welcome to my second trading masterclass. As I mentioned before, get ready. I'm about to blow your mind. That is my job. Okay. I have been in this industry a very long time. I placed my first trade, and I remember it like it was yesterday. I placed my first trade in March of 1981, my very first trade. I was nervous as hell. Now, of course, we're going back at a time where you couldn't place your own trades. There was no internet. There was no electronic direct access trading. You basically called a broker. Right? I became a professional trader, which was my childhood dream from the age of 16 in the year 1986, almost 1987. Right? Shortly after that, about 8 years after that, and gaining some fame on Wall Street and breaking a number of trading records, I decided to go out on my own, and I founded a company called Pristine Capital Management. Many of you might know it as Pristine.com. I formed that company in my basement apartment in the Bronx, New York, after leaving an illustrious career as a trader on Wall Street. I was as nervous as hell then as well. And what I decided to do was to go out and lend professional trading services to all of the Wall Street firms that used to invite me in to speak to their traders. And so in September of 1994, I went off on my own with Pristine.com. All right. I shortly after that created the second largest direct access brokerage firm in the United States. So first Pristine, and then all of my clients wanted to trade directly through me. So that led me to form a direct access brokerage firm, which was new at the time. And what I mean by direct access, guys, this history is important, is that this was the first era of traders being able to directly trade on the market. You see, prior to this, you had to call your broker, or you had to call an order room if you were in a professional trading firm. There was a room with a bunch of order takers that would take your order, but you had to pick up the phone. Later, they put order takers in front of us at the same desk. So we wrote out a ticket and handed that ticket to the order taker. Well, now I'm talking about the next phase in our industry, this rapidly growing industry where new order handling rules gave every person the ability from their own computer to press a button and get filled directly on the exchanges. This is what I mean by direct access trading brokerage firm. I opened and became the second largest direct access brokerage firm in the United States in the beginning to mid of the 1990s. I created and popularized a style of market play called swing trading. A lot of people may not know this, but swing trading is a term that I created in the industry and I popularized in the beginning of the 1990s. And if you want to do your research, all you have to do is Google Oliver Velez swing trading, and you'll see all of my former work on swing trading. I was at one particular time known as the father of swing trading. In the year 1998 was a pivotal point in my career as an entrepreneur in this new space, this new direct access trading space. Barron's, one of the most venerable publications in the professional trading space, ranked my company #1 in America as the #1 source to go to Oliver Velez for professional trading services, professional trading brokerage services. And the Dow Jones followed the next year by dubbing me officially as the Messiah of day trading, 1999. Shortly after that, I came out with my first book entitled Tools and Tactics of the Master Day Trader. That was published in 2000. I would go on to write 4 others. And today I have 5 international best-selling trading books on the market written in 5 different languages. And my 5 books have sold more copies than every single trading book combined in the history of this industry. And that is not by mistake. Today I have over 10,000 plus equity and Forex traders worldwide that span over 14 different countries. And I advised markets and exchanges globally and advised them on how to increase efficiency and increase their volume as this new industry was developing. This that you see right here is my attendance at the first International Traders Expo. In the year 1999, our industry decided to get together and once a year all show up to represent our new industry, our new direct access trading industry. The industry chose me to be the spokesman for the entire industry for 2 years in a row. That is an honor that has never again been bestowed on another individual. This is the article in Barron's that ranked me, as you can see in the far right-hand corner, the Pristine Day Trader, ranked me #1. If you go down to the lower portion of that article, you'll see Pristine Day Trader ranked #1 and all of the other services they recommended later after the Pristine Day Trader. And this is a copy of the Pristine Day Trader. This was an institutional service that I sent to virtually every single professional trading firm on Wall Street. Every single trading firm was my subscriber to this specific service. This service grew from my basement apartment in the Bronx, New York, faxed out to my first client, right? A firm on Wall Street. And that subscriber base to this service grew to over 85,000 professional and semi-professional trading firms in the entire trading industry throughout the world. This became one of the most awarded and one of the most subscribed to direct access trading services in the history of our industry. Here's a snapshot of some of my books in all the different languages. And right before we start delving into the material, I'm sorry for being a little winded with this, but it is quite necessary because I know that there's a large number of people who have absolutely no idea who's actually speaking to them, right? So very important. I want you to follow me on Instagram. You're here on my YouTube channel, so of course, by default, you should make sure you subscribe to my channel. Make sure you click the bell in the upper right-hand corner, turn notifications on. I put a lot of work into producing an educational piece of content on my channel every single day. Yes, that is not 5 days a week, 7 days a week, 365 days a year. And I believe that any individual who spends an inordinate amount of time here will inch their progress forward toward becoming a trading master. Probably not as fast as emerging yourself into a program or a course, but certainly video by video, you will inch your way to raising your level of market sophistication in the markets. Guys, at times I do live trading on Periscope, so if you want to see me at times trade live in your face, in tu cara, that's the channel to go through. go to. I will be moving my live trading to my YouTube channel in the very near future as well. So right here, you'll be able to witness me taking trades live, exiting, setting stops, taking profits, adding to my plays, and basically doing in your face very much the same things I'm going to be here teaching you today. All right. So there you are. That's me. All right. Once again, sorry for being a little winded with that, but we do have a lot of people who have absolutely no idea who I am. Now, for those of you who know who I am and those of you who are familiar with my work, my material, my teaching style, sit back. I don't want you to think that just because you're repeating some of the same concepts I've taught you before, that you can't get something out of them. Every single time you experience this content, it's different and you experience it at a different level. Why? Because you're different. I want you to understand this. It is impossible for you to take what I teach you, go out into the world, gain experience with what I've taught you, and then come back as the same individual. Each time you leave me and go out into the world, but each time you go out into the world and you gain experience, something happens to you. It might be small, it might be imperceptible to the eye at first, but that seesaw, that going back and forth is what transforms you. And that is actually what I recommend. So it does not matter how many times you touch base with the concepts I teach you, you're coming back to those same concepts, a different individual, and that different individual will receive those concepts on a higher level. Experience is the key, and this is a message I'll be speaking about quite thoroughly today. You can't gain success at this or anything else in life before experience. And there's a lot of people in this world trying to cheat this process. They think that they can buy experience. Many people in this world think that they can go out and buy a course, and because they bought a course, they're going to be successful the day after the course. Or because they've hooked up with some mentor or some so-called trading guru, that they have sidestepped the need to do the work of gaining experience. It doesn't work that way. Not in trading and not in anything in the world. So I'm always telling my traders that what's necessary is to come to the locker room with me. Let's talk about the trading concepts. Let's correct some errors. Let's teach you some specific techniques. Then you go out into the world and gain experience with them. You come back, we do it again. You go out into the world and gain more experience. Come back, and it is that seesaw, back and forth, that starts your growth to the upside. And this is a process that takes time. Everything worthwhile in life takes time. All right, guys, so let's go. The first thing I want to talk to you about today is the business. Now, one of the things I accomplished in the year 2006, late 2006, is I stepped on a path in this industry that was never done before. I was the first individual, one of the first, now I can't say I was the first, I was one of the first individuals in this industry to begin funding my own students. Now, I've been teaching professional traders on Wall Street from the year 1994. I told you that. But it is in the year 2006 that I decided to put my own money at risk on my own students. So if I was teaching an individual trader who wanted to be funded with more capital than they personally had, I would fund the trader. If a trader came to me and wanted his funding expanded, I would grant him the expansion of his capital. Because what I realized is that I was training some of the best traders in the country, and then they would go on to give that talent to other firms. And I began to actually tire of that. I began to actually tire of individuals taking my knowledge, my information, right, my training, and then going off making millions of dollars for professional firms on Wall Street. I've had traders that have gone to Warren Buffett. I've had traders that have gone to Goldman Sachs, JP Morgan, Merrill Lynch. I've had traders take my training and go on to accomplish big things. And so there's a certain point in the mid 2000s, I decided that I'm going to actually be a backer and funder of traders too. And this is the business I want to explain to you. Number one, Every single one of my traders that I train and fund must go through this grid here. Look at it carefully. There is one level of training. So here's how it works. I teach each one of my traders every single one of my tactics, my techniques. They know how to identify each one of the 14 buy and sell opportunities. They know when to enter them, where to protect themselves, how to protect themselves, when to add and when it's not appropriate to add, how to adjust stops, and when and where to take profits. And they need to also understand when profit taking should not be done because there's a lot more left in the play. And so these are all the components of trading. And once I teach a trader that, they've got part one done. Part one is understanding, at least from a theoretical perspective, every single one of the tactics and strategies and risk management and trade management. Part two is what you see right here. This is part two. Part two is their training. This is where they take the theoretical knowledge of the tactics and techniques and demonstrate their proficiency with it. So they get a $50,000 practice account. Now, this is a simulator. It is not a demo. Demos are very different from simulators. Professional trading firms use simulators. Basic, regular retail firms use demos. Demos are not important. Simulators are extraordinarily important. They mimic the activity of a market identically to being live. Identically. They're built on very sophisticated algorithms that basically mimic how you'll experience executions, how you'll experience the market. And each simulator is a multi-million-dollar contraption. So we have one of the most sophisticated simulators in the industry that mimics real-time trading. And the important thing I need you to understand is that the data is the very same professional data that every single professional trader is using at the time of every single trade. And this is usually not the case with a demo. We believe that demos damage traders' progress. Simulators actually more rapidly improve their progress than any other type of practice. And this is what many of the professional firms on Wall Street use before they give their traders 50, 60, 80 million dollars to trade. And this is what we do as well. But check this out. With this $50,000 simulator account, all the trader has to do is demonstrate his ability to make $3,000. Once that trader makes $3,000, that's it. That's enough for me. I've seen enough. Now, let's get to the business of turning this account live. So I want you to understand that every trader goes through a two-step process with me. One, the learning process. Two, the training process. They have to demonstrate their ability to make $3,000. Once they do, this $50,000 account gets turned on live for them. Now, it's for real. Now I want you to see they have the same goal at level 1 live. Make $3,000. All right, that trader will get 40% and I will get 60%. Of course, that's the best part. I'm generous, but I'm not an idiot. All right, we're in this together. The trader risks nothing of his own capital. The trader never puts a single dime into an account. The trader never has to invest in his trading, and his trading will be expanded by more money at every single level. So once again, the trader gets 40% of all gains with zero risk, and I get 60%. Once the trader achieves level 1 at $3,000, I put $100,000 in buying power in the account. Now the trader has a new goal, $6,000. That trader once again gets 40%, I get 60%. All payouts are once a month, usually around the 20th or 21st of the month. Once the trader achieves $6,000, then their account is $250,000, $250,000. Now their goal is $10,000. Once they achieve $10,000, their goal is $500,000. Now the ultimate goal here is to try to get to levels 3 and levels 4 because this is where some really serious trading money can be made. Now, there are levels beyond 4. All right. I just don't have the room here. My top trader has $38 million in capital that he's trading. So we have levels 11, levels 15, levels 20. But for the purposes of our talk, I just want you to understand the process. Now, a lot of people say, well, Oliver, if I have my own capital, why would I trade your capital? And this, I kind of understand the question, but the question is really not all that business oriented. It usually comes from someone who is really not thinking from a business point of view. That's like asking a real estate mogul, why don't you use all of your capital to buy the homes and do the projects that you do? That's like asking a successful bakery, why did you go to the bank to open up 3 more bakeries across town? That's like asking a $100 million company, why did you go IPO to get $500 million in cash? Because I want to be a multi-billion-dollar company. No professional trader on Wall Street trades with his own capital. I don't care how wealthy the trader is. Never in my 33 years of professional trading have I ever met a professional trader that uses 100% of their capital. It's not smart. Why would you limit your profits to the small amount that you have when your small amount can be utilized with a big amount? It's all about leverage in this business. No professional uses their own capital. Billionaires even start hedge funds to attract the billions from other billionaires. Not that they need the money, but largely because they're held to a higher standard when they take the money from other billionaires. But if you've got $25,000, why not trade with $250,000 and your profits are more? If you've got $250,000, why not trade with $1 million and your profits are more? Granted, if you're a profitable trader. So profitable traders don't want their profitability limited to their own capital. Profitable traders know they can always gain access to more capital than they have if they are consistently profitable. And this is how I keep a lot of my top traders. Top trader makes $1 million. Okay, here's $2 million. Now they have $2 million. Okay, here's $5 million. So traders always want to utilize other people's money so that their gains can be leveraged. Now, the other reason is because why would you want to risk your capital? Especially at the beginning. You have no idea whether or not this is going to work for you. It doesn't work for everyone. But I believe that every individual should give it a try, but you should never give it a try with your own capital. Now, I didn't give it a try with my own capital either, but I didn't have capital when I started. So I couldn't start with my own capital. But even if I did, I wouldn't have, all the way back in the 1980s. So when I hear someone say, I'm going to use all of my capital, I know I'm not talking to a person who's business-minded. Because no real estate mogul uses their own capital, no successful businessman uses his own capital, and no successful trader uses his own capital. All right, so for those of you thinking like that, I'd like you to do your best to put that aside. Don't ever risk a single penny of your family's money. You find a way to push that risk onto someone else. Now listen, I have to finish this for a second. I want to explain a few more things here. Making $3,000 with a $50,000 account is really not the difficult part. I have traders who make $4,000 in a day with $50,000, especially in this market we're experiencing now. $800 in an hour, $1,500 in a morning. So the $3,000 target is not the important thing. And I want you to also understand that you can be as slow as you want to accumulate this 3,000. I'm not talking about 3,000 in a day or 3,000 in a week or even 3,000 in a month. You bring me back $3,000 whenever 6 months, 4 months, a year. It doesn't matter. As long as the account ultimately gets to $3,000, you're done with your training, and we are in business together without you ever having to put a single penny of your family's money at risk. All right, now, so making $3,000 is not the hard part. Do you know what is the hard part? It's this and this. You see, you have to make the $3,000 responsibly. You can't lose more than $300 on any given day. And you can't lose more than $600 on any given week. If on any given day you are down $300, you're not able to trade until the very next day. But here's the thing. If on any given day you are down $301, you've got 6 seconds. As one of my traders, you have 6 seconds. 6 seconds to do the right thing. 6 seconds to eliminate everything in the account. 6 seconds to go flat. 6 seconds to turn the account totally 100% into cash. If you don't act and do the right thing in those 6 seconds, I have algorithms that will auto shut your account down in the blink of an eye, and your keyboard will not work until the next morning. Now, I've told you before, I'm generous, but I'm not an idiot. All right, but I do give you that 6-second window. The same thing on your weekly loss. At any point you are down over $600, $601, you've got 6 seconds to end. And once your account is either auto shut down or you liquidate beyond your loss limits, you can't trade until the next day on the daily or until the next week on the weekly. Now, once you experience that once or twice, you will work very hard to not ever let that happen again, because it is frustrating not being able to trade and take the opportunities you see because you're already beyond your maximum. So this trains you to make money responsibly. There are many traders who make a big score, but they make a big score recklessly, and they're an accident waiting to happen. They never last because they've never learned to make money professionally, to make money the right way. What's the right way? Making it without ever allowing the account to go down drastically. Now, $300 is not drastic. $600 a week is not drastic. So as long as you stay within these limits while you are achieving your ultimate goal of $3,000, you are learning how to inch forward the professional way. You're not wild. You're not a gambler. You're not playing this game like you're at the casino. You're playing it from a dual perspective. I have to win, but I can't let the account drop this far. I have to win, but I can't let the account drop this far. And that's the mindset of a professional. This very program, this very matrix here, forms you into a professional trader acting in a professional way. And as you see at each level, those numbers change. You go from 300 to 500 a daily, and from 600 a weekly to 1,000. And then 1,000 to 2,000, and on and on and on. All right? Notice what your goal is at the ultimate level here. Your goal becomes $20,000. You have a $2,000 daily loss amount and a $4,000 weekly loss amount. And as long as you stay within those, you continue to trade. So, now that you know how the business part works, it's time for us to delve into the trading. I'm now going to show you how to take the $50,000 and work your way all the way to that ultimate level of $500,000 and beyond. And this is how you do it. So now I want you to get your pen, pencil, get your paper out, get your note-taking paraphernalia ready. and let us begin. These are the tools, the tactics, the techniques that can get you all the way through that matrix. So let's talk about the tools that we need. Let's talk about the tools that we need. The first thing we need is the $50,000 account to start. And guys, look, $50,000 is a small amount, but it's an excellent training amount. It's still very, very small. I do not believe you can do this professionally with a small amount of capital. You can't do this with $5,000, $3,000, $10,000. It doesn't work. These small amounts force you to be a bad trader. They force you to get out when you're not supposed to get out. They force you to trade under intense fear. They force you to take your profits too early because you're so nervous that you're going to lose the little bit of profit that you have. It encourages all of the wrong emotions, all of the wrong actions, all of the wrong feelings trading with small capital. Trading alone is difficult enough without you adding difficulty by trying to show up to a gunfight with a toothpick. It just doesn't work. You're not going to win. So $50,000, in my opinion, is the minimum, but it's a great training amount because if you learn how to make money at the $50,000 level, then adding another zero at the $500,000 level is almost automatic because the actions are the same. It makes no difference between the actions with $50,000 and the actions with $500,000. The buttons are the same. The buy buttons and the sell buttons are pressed at the same time. It's just a different amount of shares attached to those buttons. So if you learn how to do this properly, you pretty much automatically know how to do that. You just change the size of each button. But it doesn't work with substantially less, because less you're not allowed to flourish and grow because you're always forced to do the wrong thing because your window is too tight. Okay, so we need a $50,000 minimum account to start. I take care of that for you. We need a 2-minute chart, right? Not a 15-minute chart, not an hourly chart, not a daily chart. Not that you can't reference them, but all of my traders get trained on a 2-minute chart. And a lot of traders say, well, Oliver, why? Because the 2-minute chart is what gives you the trading opportunities at a frequency that allows you to develop more rapidly than a bigger time frame. So if you trade on a 5-minute chart versus a 2-minute chart, the 2-minute chart trader will develop faster than the 5-minute chart trader will develop. Why? Because there's more opportunity on a 2-minute than a 5-minute. And of course, if there's more opportunity on a 2-minute than a 5-minute, then there's certainly more opportunity on a 2-minute than an hourly or a 2-minute and a daily. So we need a certain degree of frequency. We need our opportunities coming at a certain frequency to get you trained to the maximum level as fast as we can. And we need an opportunity coming to you every 8 minutes. So on the 2-minute chart, you will get an opportunity in the markets every 8 minutes of your life. Go to the 5-minute and it's every 20, 25 minutes. Longer sometimes, 30 minutes. So you slow your world down. And if you go to bigger time frames, you're getting trading opportunities every few hours and then sometimes every few days, depending upon the time frame you're using. And this is not how you make a living. We make a living by having an opportunity present itself every single 8 minutes on average of our life. So it is theoretically possible to be wealthier than you were 8 minutes ago every 8 minutes at a time, but only on the 2-minute chart. Now, some people say, well, Oliver, why not the 1 minute? Well, the 1 minute is pressing it too far. You can always take a good thing too far, and the 1 minute is so minute, right? It seems like it's not, it's just one level down, but it's 50% less, right? That's a big percentage. The 1 minute chart causes movements to look overblown that aren't really very meaningful. And so I find that traders who trade off of the 1 minute develop slower and reach mastery, if they reach mastery at all, much slower than the slightly larger time frame. So we believe that that 2 minute chart sits perfectly between a time frame that's too small and a time frame that will slow you down from the optimal speed of development. 2 minute time frame. Then we need a 20 period simple moving average. We need a 200 period simple moving average. And these two moving averages put on the 2 minute are basically the only two indicators we rely on. Throughout my history, I've used virtually every technical indicator known to man. I've even created my own indicators and had my own indicators put in virtually all of the professional trading platforms. But today, I've realized that most of those things are superfluous, and most importantly, most indicators are lagging indicators, and I teach you not to lag in your trading. And you'll understand what that means shortly. So I use a simple 20 period moving average and a simple 200 period moving average overlaid on the 2 minute chart. And we also need to be able to identify what I call a tight picture of power. And this is what I'm about to teach you. So let's go. Now, here's the 20. Here is, now these things are, give me a second here, guys. Okay. 20 and 200. We're going to take this 2 minute chart. Now, I grabbed a 2 minute chart of the Dow Jones Industrial Average. Every bar represents 2 minutes of trading. The green bars are 2 minute periods up. The red bars are 2 minute periods down, obviously. Okay, 2 minute chart. Here is the 20 and the 200 superimposed on the 2 minute chart. Now, there are a couple of things I want you to realize right off the bat here. I want you to note that the stock is predominantly in a rising uptrend. Your stock is in a rising uptrend. That rising stock or that rising item is above the rising 20 period moving average. So two things are rising here. The stock is rising, or the index in this case is rising generally, and your 20 period moving average is rising. Very important. I want you to note that item 1, the stock, item 2, the 20, and item 3, the 200, that both of the two rising items are rising above the third item, the 200 period moving average. Now, why is this important? This is important because I call this the picture of power. The picture of power, traders, is when your item is rising to the upside, that item is above a rising 20. That rising 20 is above its mother, the 200 period moving average. Now, the 200 does not have to be rising, but the other two must. So this is called the picture of power to the upside. We also have the picture of power to the downside. Let me show you what that looks like. Here, you have a 2 minute chart of Facebook. Every bar, once again, represents 2 minutes of trading. The red bars are 2 minute periods down. The green bars are 2 minute periods up. Now, you're looking at a 20 period simple moving average and a 200 period simple moving average superimposed on the 2 minute chart of Facebook. Now, this is the picture of power to the downside. Note that your stock is declining to the downside in a downtrend predominantly. That declining stock is under a declining 20 period moving average. I want you to note that that declining 20-period moving average is under its mother, the 200-period moving average. And so item 1, the stock, item 2, the 20-period moving average, both of these items are under the 200, creating what we call the picture of power to the downside. Now, why is this important? Because over 90% of all of your money throughout your entire trading career is going to be made from these two pictures, the picture of power up and the picture of power down. In fact, this is so important that your first order of every single day is to take your list of stocks. You might have a list of 10 stocks that you trade every single day. Take your list of 10 stocks that you trade every day and pull out the ones right now that have pictures of power up or pictures of power down. Out of those 10 stocks, you might have 4. 1 picture of power up, 3 pictures of power down, which tells you that you should predominantly be looking to be a seller because the market is telling you that the vast majority of power is to the downside. And you use this selection process to determine predominantly what side of the equation do you lean on. What does the market have more pictures of power down? Is Apple a picture of power down? Is Facebook a picture of power down? Is Starbucks a picture of power down? Is Twitter a picture of power down? And is Nvidia the only picture of power up? What is that telling you? It's telling you that the flow is to the downside. The power is to the downside. The market is telling you, go that way, son. Go that way, my child. Go to the downside. So you can use these two pictures of power to determine where is the market's flow. What side should I predominantly focus on? Should I focus on the buy side, picture of power up? Give me a second here, guys. There's a delay here. Should I focus on the upside? Well, are there more pictures of power up than pictures of powers down? And if that's the case, yes. Now, there's something else I want to point out to you. I'm going to give you market law number 1, and I need you to help me keep track of these because I always keep track of the numbers. Market law number 1. You should, 90% of the time, you should trade in the direction of the 20-period moving average, which means that if the 20-period moving average of your stock is rising, you are a buyer. That's law number 1. Law number 1. 20-period moving average, trade with the 20-period moving average. If the 20-period moving average is rising, you are a buyer. You are not a shorter, 90% of the time. If the 20-period moving average is declining, you are a short seller. You're a seller. You're a short seller. You're bet to the downside. So you should be able to look at every single stock or every single tradable item in the world and immediately ask yourself, do I have a rising 20-period moving average or do I have a declining 20-period moving average? Then ask yourself, is that rising 20-period moving average the picture of power up or is that declining 20-period moving average the picture of power down? Now, you know law number 1, trade with the 20, not against it, 90% of the time. Trade with the 20, not against it, 90% of the time. One more time for good measure. Law number 1, trade with the 20-period moving average. Let me go one step further and say this. Over 85% of all losses are the result of going against law 1, trading against the 20-period moving average. Traders are out there trying to be smart, trying to be too fancy, trying to be better than the market, trying to pick the tops when they should actually be buying the pullbacks. So when you have a rising 20-period moving average, Your number one goal is to buy, Now, the question comes, what do you buy? Well, before I say what, I have to give you one other law. We know law 1 says buy with the 20, not against it. Law number 2. Law number 2 says you can only buy at or near the 20. So, law number 1, trade with the 20. Law number 2, buy at or near that 20. So look, not here, here, not here, 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 not here. So when you are away from the 20, there is no buy. When you are separated far from the 20, there is no buy. When you are elevated, floating decently above the 20, there is no buy. So not only must you trade in the direction of the 20, you must think about going in at or near the 20. So those are the two important laws. So what goes without being said, what should go without being said now, is that if you're going to buy near the 20, but never away from the 20, then what should you do once your stock gets away from the 20? You should be a seller. So, law number 3 comes into play. Let's go over the laws. Law number 1, trade with the 20. Law number 2, buy near, at or near the 20. At or near. Law number 3, sell away from the 20. Away from the 20. Away from the 20. You see, here's the thing. Stocks can get far away from the 20. They can't stay far away. I'm going to repeat that. Stocks can get far away from the 20. They just can't stay far away. Stocks can get away from the 20. They can't stay away from the 20. Stocks can get away from the 20. They can't stay away from the 20. It's almost as if the stock is a dog and the 20 is a leash and the 200 is the mother, in a way. So once the dog runs a little bit too far, just a tug of the leash brings the dog back into order. Stock gets a little too far ahead of itself. The dog gets a little too far ahead. The 200 tugs the leash, brings the stock back in. So when your stock is at or near the 20, it's a tame stock. When it has separated itself from the 20, it's getting a little ahead of itself, and it's very, very, very close to being pulled back in. So we use this phenomenon to get in, near, out, away. In, near, out, away. In, near, out, away. And I hope that concept's understood. Okay? So right on these first few slides, you've got a set of laws. Let's take a look at the down picture. Well, wait a minute. I'm sorry, I got one more thing. When you are playing with the 20-period moving average, when you're in that mode, that 90% mode, I trade with the 20-period moving average 90% of the time. I'll explain the 8%, the 10% later. But when you're playing in that mode, you're playing two games, the power game and the color game. And I'm going to go over those two games thoroughly. But right now, I want to talk about the color game. Because the color game will be the most dominant game you play. Well, both of them are dominant, to be honest with you, the color game and the power game. But here's how the color game works. Once you have come back toward your 20-period moving average, you're looking for green to wipe out a red. Boom! And that's your entry. I'll repeat that again. Once your stock pulls back toward the 20-period moving average, you're looking for the very first time green takes out a red. Boom! And that's your entry. So let's look at this. Here's red. Here's red. And when does green take out red the very first time? Boom! That's your entry. Here's red. Here's red. Now let's mark the high of red. This green doesn't take the high of red out. This green doesn't take the high of red out. But here's another red. Now we drop to this red. Boom! That's my entry. The very first time green consumes a red by trading above it. Green assumes a red by trading above it. Green consumes this red by trading above it, not too far from the 20. But look, green consumes this red by trading above it. That is not yours. No, 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 no. You know why? Too far away from the 20. These have a high failure rate. These have high success rates. Boom, near the 20. All right, let's go over them. Boom, near the 20. Boom, near the 20. Boom, near the rising 20. Boom, near the rising 20. No. Sell away from the 20. Sell away from the 20. Sell away from the 20. And so guys, if I were to stop this master course right now, you should be able to go to any stock in the world, I don't care if you trade cryptocurrencies, I don't care if you trade options, I don't care if you trade stocks, I don't care if you trade futures, I don't care if you trade Forex. I am teaching you universal principles that will serve you in every form of trading for the rest of your life. You should be able to go to any market, any stock, any tradable item, and pull out the ones with rising 20 above a rising 200. And then go play the color game. Whenever green takes out red, boom! Whenever you move away, out. Whenever green takes out red, boom! Boom! Whenever you move away, out. Repeat, repeat, repeat. Now we're going to add flesh to this. Don't worry. This is still very basic, but it's extraordinarily powerful. Let's go. All right. Now, we take Facebook, the picture of power to the downside. Note that the 20-period moving average is declining. The stock is declining. It's declining under the 20, and both of those are under the 200. Now, because we have the picture of power to the downside, our job is to play the color game down, but the opposite way. So when does red overtake a green near the 20-period moving average? Here's green near the 20-period moving average. When does red take the green out? I tell my traders, come from way over here. Send that missile. Boom! So don't come from over here. Boom, Oliver. Boom, boom, boom. Yeah, this is where I get in. Boom, 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 boom. No, come from way over here. Boom! Protect yourself above the color. We'll get to that. Here's green here. Not too far. Doesn't have to be touching, just near. Just not far away. See that green there? As soon as red, boom! Boom! All right? So we're playing the color game predominantly in the direction of the 20 during a picture of power. Now, here's the amazing thing. You will never, ever in your entire life have a day where there are no pictures of power. How amazing is that? Never in your life. You will never be twiddling your thumbs. You will never be searching, never be looking, never be wondering when is the next picture of power going to come, man. I haven't had a trading gain in a long while. Never. Never, ever, ever. There's always pictures of power. I encourage my traders to have no more than 10 stocks that they become intimate with. They become their family members. They live with them every single day. This becomes a part of their edge. Their job every morning is to isolate out of those 10 stocks. Out of those 10, 2, 3, 4, 5, 6, 7, 8, 9, 10. Out of these 10. Every day you might have something like this. These 4 have pictures of power up. And these 2 have pictures of power down, and these don't have anything. So now you know I'm going to lean toward the upside because more have the picture of power up. That doesn't mean you can't take this as well, but you want to lean more of your plays on the buy side because more pictures of power up. That's the market talking to you, communicating to you, telling you, go this way, my child. All right, we're building this brick by brick. We're putting the foundation in. The foundation that will come as close as it possibly can to forcing you to trade the correct way with sound principles. All right. Now, let's take these entries. Boom. Protection, we'll get to that. Where do you take profits? Away from the 20. Okay, we come back near. In. When you take profits, away from the 20. I have a trading kids program. I have over 400 traders, close to 500 traders actually. Kids between the ages of 10 and 15 years old. There is a trading kids trading program going on right now, and we have kids from 6 different countries between the ages of 10 and 15. And guess what? They trade better than you. You know why? Because they keep the game simple. They almost never take a play that is against the 20-period moving average. And they understand colors, red and green. They understand get out if the red moves back above green, get out. They understand that visually this is away from the 20. But the adult would ask, but Oliver, can you give me a formula for what's exactly away from the 20-period moving average? Is there a number? Is there a percentage? And I never get that from kids. They just say, Oliver, that's far. I say, okay, so what should you? Oliver, that's far. Okay, now what should you be doing? I should be taking profits now. Boom. They get it. They don't overcomplicate it. They don't look for formulas. They don't look for percentages. It's just visual to them. Oliver, this is far away from that 20. They don't need a number. They don't need a formula. They don't need to be certain. They just see it as a child. That's far. And it is because of that childlike quality, they statistically outperform their parents, because all of their parents are traders. All right. Let's go. Let's go. We're building it. We're building it. We're just getting started here, guys. We're just getting started. Let's talk about the states. This is the next building block for you. All right. We've covered the pictures of power up, the pictures of power down. We've covered the laws. Trade with the 20, not against it. Enter near the 20, not away from it. Take profits away from the 20. All right? Play the color game when you have the picture of power near the 20. So we've got that down. Now let's talk about the different states of the market. We're going to judge the state of the market by the positions of both the 20, the 200, and the item you're trading. Now, this is what I would call a narrow state. Notice how the 20 and the 200 are close. It's a narrow state. It doesn't matter if the 20 is close above the 200 or close below it. It's just they're both together and tight and not wide and separated apart. They don't have to be touching like over here. They can be, but they don't have to be. There can be some space between them, but it's not far apart. That's what we're talking about. Relatively tight and narrow. Okay? Now, let's go to the next state. From a narrow state, you will tend to flow. Sorry, guys. You will tend to flow to the upside. What do I mean by flow? Long, enduring moves. Not short-term 1 or 2 bars and it's over. Not every time, but we're talking probabilities here. The probability of a long, flowing move out of the narrow state is relatively high. Now, here we go back to the Dow Jones Industrial. Look to the left of your chart. Look at how the 2 moving averages are relatively tight. And out of this relatively tight zone, the market flows to a more separated state. And it is, notice how your moves to the downside along the way were mild. But look at how the moves to the downside are starting to get bigger and bigger. Why is that? Because your trend is now mature, which brings more heavy selling into the game. So separated moving averages mean your trend is mature and more heavy selling is going to become the reality. Why? Well, think about it. This move has created a lot of people profitable. It has created profitable traders. And the higher this goes, the more these profitable traders say, I'm going to start taking profits. I'm going to start locking my gains in, especially when trouble starts to emerge. They really start hitting the sell key. So you're more susceptible to sharp moves to the downside when you are separated. And look at how unenduring the reds are when you're not that separated. And then they start to get sizable, really sizable. So from here we go from narrow to wider. I wouldn't say this is really wide, but definitely wider. Now this is yesterday's price data, by the way, in the Dow. Yesterday's data. Here is another tight scenario where the 20 is under. It doesn't matter if the 20 is over or the 20 is under the 200, as long as they're close. They don't have to be touching. I'm going to keep saying that. They can be separated, but just not far apart if you're looking for the narrow state. Let me tell you, traders, as clear as I possibly can, the best trades of your life will come from a narrow state. Let me repeat that. The best trades of your life will come from a narrow state. One more time for good measure. The best trades of your life will emerge from a narrow state. So what should you do? You should take your list of 10 stocks and isolate those who have rising 20 period moving averages in the picture of power, which have declining 20 period moving averages in the picture of power. Which ones have narrow states? The narrow states, the move up or down hasn't started yet. So you'll be grabbing three things. One, picture of power up. That means it's already in motion. Two, the picture of power down, already in motion. And three, which ones haven't started the motion up or down yet? These are the three items you're going to make your entire living from. There's one more, actually. There's 4 scenarios, 4 states that you're going to make your living from. The power trend up, 1. The power trend down, 2. The narrow state, the beginning of it all. And 4, the wide state, which we talk about in just a bit. Well, let's go. So you can, from a narrow state, remember, you can head to the upside, or from a narrow state, you can head from a downside. Now listen to this. You don't have to know which one, you don't have to know in advance. You just wait for the move to begin below the narrow state or above the narrow state. A lot of traders get this wrong. They think that in order to be good at this game, you have to predict the future. No, you have to know the now. Right now, is your stock starting to drop below the narrow state? Boom, that's all you need to know. Right now, is your stock starting to rise above the narrow state? That's all you need to know. You don't have to know it before it happens, which is impossible. All you have to do is identify it in your now. All right. So you can flow to the downside. Let's take a look at an example. All right, that's the flow to the downside as we discussed. Now, look at the wide state. It's called what I call a wide state up. Okay? You've started out at a narrow state. Your 20 and 200 were relatively close. But the 20 began separating away from the 20 more and more and more. And now it is in what we consider a wide state. It's far away from its mother. It is at this far away point, no more color game. Stop the color game. You're playing the color game here, taking profits. You're playing the color game there. Boom. Taking profits. So you're coming in here, coming in there. Your stock moves back toward that 20. Boom. You're playing the color game. But at a certain point, taking profits, no more color game. Boom. Too wide. As I told you, wide means mature. Mature means people are fat with profits. People who are fat and sloppy with profits, their next act is to sell. Reliability on your buys from a wide state drop to a very low level. Buy opportunities from a narrow state are extraordinarily powerful. Buy opportunities from a wide state, you're at the casino. Tell me you understand this. Wide state, we stop the color game. All right. From a wide state, it will tend to lead downward. Here is yesterday's chart of a company called Roku. Some of you may know it. Roku Inc. Boom. I want you to note that look at your moving averages close together. Look at the move up, up and away, up and away, up and away. Look at how your 20-period moving average separates from the 200. Look how the stock is way above the 20 and the 20 is way above the 200. This is what I call dual space. The space of your stock is high above the 20. The 20 is high above the 200, giving you dual space, which usually leads to an enduring move to the downside. You are too elevated to think about buying. Never again for the rest of your life will you ever be caught at the top of a move like this. Never again will you be fooled again. Never again, I keep saying before, never again will you be the last guy holding on to that little tail right there, hoping that your market comes back to you. Wait a minute, it's coming back, I'm getting my money back. Oh, no, let me hold on longer. Oh, it's coming back. Oh, wait, now it's really coming back. It's coming back. Yes, I'm going to get my money back. Never. No buying from these lofty, separated, wide states again. If you do anything from a wide state, flip the color game. Smack it, flip it, rub it down. I'm dating myself. You guys should know that song though. Some of you should know that song. Smack it, flip it, rub it down. Flip it from the wide state. Flip it. You know what I'm talking about. Are you understanding this, guys? Flip it, flip it. Let's talk about flipping it. I love this. I love this. I love this. I love you. All right, let's go. Let's do it. All right. From this wide state, you can start taking bets when red eliminates green. Boom. Red eliminates green. Boom. Now listen to me carefully. You're playing against the 20 in this case. Remember I told you 90% of the time you trade with the flow, with the 20, but 10% of the time you go against it. When do you go against the 20? In the wide state. When do you go with the 20? From the narrow state and the middle state. But wide state, you can start going against the 20 and playing the opposite color game, the opposite color game, the opposite color game. At this state, you are playing with the 20-period moving average. Green takes out red. Boom. Look at this red. Green takes out red. Boom. You see? But this gets too separated. And so that color game has to stop. Now you can go on the other side and play the opposite color game. Red takes out green. Boom. 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 When do you take profits? Away from the 20. Away from the 20. Away from the 20. Red takes out green. Away from the 20. Away from the 20. Because now you're playing with the 20-period moving average. And so, guys, look. I'll do it once again. You're looking for stocks that have the picture power up, which means they're already in motion, but not wide. 2, stocks that have the picture power down. Separate, create these lists. Take your 10 stocks and divide them into these categories. 3, stocks that have the narrow state, that haven't gone yet. Now, you're going to make the majority of your money here, but there is that fourth quality. There is that fourth state. Stocks that are super wide. Or super wide this way. So these, you play the opposite move. This you play this way. This you play that way. And this you're waiting for this or this. Guys, if you can keep these 4 states in your mind, if you can make really good notes about these 4 states, I promise you with everything I have, that it will be hard to combine this with the laws that I've given you so far and trade the same way you've traded before today. It's impossible. Because if you buy in 1, I buy near the 20 and sell away from the 20 using the color game. In 2, I sell or short near the 20 and I take profits away from the 20. Number 3, I wait to jump on board if the move goes above the narrow state using the color game or below the narrow state using the color game. And 4, I no longer play with the 20. I go against the 20. These 4 states, with the trading laws, trade with the 20 90% of the time. In state 4, trade against the 20. Trade buy at or near the 20 in the first 2 states. Sell away from the 20 in the first 2 states. In the state 3, wait for the break above or below and start your color game. And so there are traders that go into the markets every day and just guess. What should I do today? There are traders every day that just look at news and say, I guess I'll just play what's in the news. There are traders every day who just basically, they might as well be throwing a dart at a stock page in the Wall Street Journal and just randomly buying. There's no method. There's no approach. They don't know how to take a list of stocks and get right down to the 2 or 3 I'm playing right now, or the 1 that I'm playing right now. So from this point onward, I should be able to give you any random list of stocks, and you should be able to say, Oliver, that's category 1. That's a power trend up. All right, I know what to do there. That's category 3. That's a narrow state. I'm waiting for the move up or down here. These two stocks are in category 4. I'm waiting for the color game in the opposite direction. Oh, and this stock is in category 2. I'm playing to the short side, but once I get the color game near the 20-period moving average. You should be able to take any list of stocks, any list of tradable items, and break them down into these 4 states, and you know precisely what game to play and where. Now, I haven't even gotten into the detail yet. This is just building the building blocks of sound market play. Now, you know, wide leads back to up. Look at the Facebook chart again. Look at where we start from. We start narrow. Boom, we come out of narrow. Okay, it didn't move like this. Color game right now. We're going to talk about the power game in just a bit. But we get pretty wide. Look at the bottom of your stock is here. You can't see it because of the dashed line, but the bottom of your stock is here. The 20 is here, and the 20 is separated far from the 200. You're too far separated now to continue this color game. Now, if you like, play strong removals of red. Strong removals of red. Boom! See that red? Strong removal of it. Strong removal of it. Now we're far away again. No more color game until this 20 gets closer. I'm going to have you trading like champs. This is Delta Airlines from yesterday, I believe it is. Yes, this is Delta Airlines from yesterday. That's the stock, a 2-minute chart. Now look, narrow state. All right, this starts the day. So your state was pretty narrow right from the start. Now, let me just do this clearer. This is here's your moving averages. They're tight, relatively tight. Now, right now, just play the color game. Stock didn't open here, up. It's under the narrow state. So if you look carefully, I don't know if you can see it, the first bar of the day is this green tail bar. And then red breaks the low. Boom! Look at this green bar. Red breaks the low. Boom! Look at this green bar. Red breaks the low. Boom! You can be a little bit past the 20. That's fine. As long as the 20 is sloping down. Look at the red eliminating that green bar. Boom! Look at the red eliminating that green bar. Boom! At or near the 20. Look at the red eliminating this green bar. Boom! Do you see this green bar trying to hide from you? Look at this green bar trying to hide from you. You see it? Peekaboo. I see you. Boom! 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 Profit take away. 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 And why no more color game? You're done. You're finished. You're rich enough. When is enough enough? This is amazing. Now you can take Strong color reversals the other way. Boom, eliminating 2 reds. Powerful. That was just yesterday. So I want to make sure that you, my babies, are picking up what I'm laying down here. Let me get some more light in this thing here. All right. Simple. Real, proven, powerful trading tactics are simple. They are not easy. I will never tell you that this game is easy, but it is simple. I mean, think about it. What am I teaching you? The market has 2 predominant directions, up and down. The dominant ones, up and down, 2. The market has 2 bar colors, red and green. I'm teaching you 2 moving averages, the 20 and the 200, right? I am teaching you 2 states, narrow state, wide state. You have 2 actions, buy and sell. You have 2 dominant plays, long and short. You have 2 positions related to the 20, near the 20, away from the 20. And you have 2 frickin' results. Winning trade, losing trade. This is a game of 2s. If you allow me to teach you this game of 2s correctly, it will become simpler than it ever has been for you your entire trading career. And if you don't have a trading career and you're just starting, that's even better. You're my blank slate, because usually when I get people who are so-called experienced, I have to undo what they know, which takes time away from us moving forward. They usually come to me with bad information, faulty ideas, erroneous belief systems, and these terrible trading tactics that are not based on these sound principles I'm teaching you right now. Now, if I were to stop this course right now, you should be able to go to any chart in the world right now and say, rising 20, picture of power, all right, away from the 20, no go, that's a sell point. I'm going to wait for it to drift back toward the 20 and see what a color reversal looks for. Tight, narrow range. Oh, okay. I have to wait for the break out of the narrow range up or the break out of the narrow range down. Start the color game in either direction. Wide apart. I'm in a wide state. Let me look to go the other way on strong opposite color reversals. That's that 10% of the time you go against the 20-period moving average. You fight the prevailing trend 10% of the time in very wide states. That's how I called the market's top in February. Wide state. And the worlds went crazy. Oliver, how did you know? How did you know? Now you know. Wide, super wide state. I didn't know COVID-19 was going to hit. No. But I did know wide state. And from a wide state, just the smallest little negative, boom, causes all of those profitable people to just rush to take their profits, which causes the market collapse. Because if everyone starts selling at the same time, the market's going to collapse. The same way if every customer of a bank asks for their money on the same day, the money's not there. The bank's going to collapse. Same way in the market. The market can handle a few people asking for their money every few days. But when every player wants their money, the money's not there. Collapse. And that's the scenario from a wide state. All right, guys, let's get back. All right. I love this. So look, guys, what we're going to talk about positions now. We're going to talk about positions. Very important. When your stock starts its day just above the two dominant moving averages, the 20 and the 200, starts its whole day, starts its whole life that day, just above. It doesn't have to be touching to be in this very beautiful position. It doesn't have to be touching. But we're not talking about way up here either. All right? We're talking relatively close, not too far away, just not super far away. But this is your most ideal position. Just above this narrow state. Because from there, you get flow most of the time. Not all the time, nothing's all the time. Let's not be ridiculous with our expectations. Nothing's all the time. But we want that position. So what you should be doing every morning is which one of your 10 stocks is opening in that sweet spot. What stocks are opening in my sweet spot? My sweet spot is just above my two moving averages. Now, guys, I will tell you that there are some decent buy opportunities between as well, as long as between is not that far apart. But this is the sweet spot, just above. Now, on the downside, the sweet spot is just below. Just below. That's my sweet spot. Whoo! Whoo! I start salivating and the market's not even open as I draw this here. Whoo! Love that spot. And if you watch me trade, or you know my trading for years or what have you, you know that I short 9 times out of 10. So this is my number one location. I love this location. I love to bet down. Why? Because stocks fall harder and faster than they rise. My money comes faster. My money is at risk. My money is exposed to the possibility of danger a much shorter period of time in a short than it is on a long statistically. But oh my God, is this where I live? I live here. That's my spot. All right. Get a little excited here. Boom. Okay. So we got the sweet spot. Let's keep putting bricks into this foundation. I'm not done with you. I'm going to take you to a level. By the time you finish, I finish with you today. Just a little bit. By the time I finish with you, you'll be able to pinpoint exactly where you buy every time, where you protect yourself, where you add, and where you take profits. You'll be able to identify every single time, where do I go short? Where do I protect myself? Where do I add to this winning play? Because all professional traders add to winning plays. Where do I add to it? How do I protect myself, just in case it doesn't work? And when and where do I take profits? And your job will just be to become experienced with this formula that I give you. You see, the formula you're going to walk away with is the first step. But you've got to gain experience with it. It's sort of like you just bought your first your first soccer ball. You're 4 years old. You've got to gain experience with that soccer ball to be able to handle it well. Just because you have the soccer ball doesn't make you a professional soccer player. Just because you went out and bought professional knives not cooking knives doesn't make you a master chef. Just because you have this master carpenter's tools doesn't make you a carpenter. They help, but it doesn't make you a carpenter. You have to now utilize those master carpentry tools to become experienced with each one, the saw, the screwdriver, the hammer, the this, until you're able to build marvelous things with them. Just because you have my tactics and techniques will not automatically make you successful until you first take those tactics and techniques and make them yours. How do you make my techniques your techniques? Through experience. And through experience, you're going to initially lose first, gaining that experience, winning after the experience, but losing before the experience. And why should you do that with your own capital, knowing that the experience building period is a money losing period? It doesn't mean that what you're doing is wrong. It doesn't mean that what you have is wrong. It just means you're not experienced with the soccer ball yet. It's not the soccer ball's fault. It's not the carpentry tool's fault. It's not those magnificent, expensive chef's knives. It's the fact that you haven't gained enough experience to use them properly yet. But so many traders will float around from, oh no, I need another set of carpentry knives. I'm not winning with these. No, I need another set. I need my third set of carpentry tools because I'm not building anything with these. Then they're off on their 14th and 15th and 16th set of carpentry tools, blaming it on the tools when it's really their lack of experience. They never stand still enough to get the experience to make the carpentry tools sing. But you need experience to make your tools sing. You see, the talent, experience flows through your tools. I am giving you tools today, but you will have to get experience with them so that the experience flows through the tools I'm giving you. People think it's just tools. You need the tools. You can't build a house without the saw and the hammer and the screwdriver. We know that. It's very critical. And most people don't even have tools. So they're just completely lost. But even the ones that get the tools think that the answer, 100% of the answer is the tools. But they fail to realize that the experience with the tools must be developed. And you can't rush experience. I'm sorry. Tuesday, you can't make Tuesday come faster than it comes for me. Wednesday can't speed up for you and it be normal for the rest of the world. You can't rush experience. And I hope this doesn't discourage you but I'm going to say it anyway. And if it does discourage you, you don't belong in this world. You're going to get killed. You can't have success before you're experienced. Because any success that you think you have before you're truly experienced is luck. And luck runs out. Don't ever bank on being lucky. Bank on being skillful. All right, guys, the power game. Now we're going to start delving into some of the really, really amazing concepts. There are two types of power bars I want you to focus on. These power bars are what I call elephant bars and tail bars. Simple. Elephant bars, there's a variety of different elephant bars. I'm showing one type now. And there are a variety of bottoming tail bars or tail bars. I'm showing you 3 of them now. Okay? Right? Everything can't be for free, as you know. So, I want us to focus on these 4 bars. These 4 bars typically mean that there are higher prices to come. You see a strong, solid, fat, green bar, odds are higher. You see a little green top with a nice sizable tail at the bottom, higher. You see even a little red top with a nice sizable tail at the bottom. You see no color with a nice sizable tail at the bottom. These bars are the visual representation of institutions piling into your stock because you and I can't form an elephant bar. It takes billions of dollars to do that. You and I can't make this stock go from being a red bar first. We don't have enough money or power to make Microsoft turn from a red bar, boom, into a green bar with a tail. You see, in order to get that tail, it first must have gone down, then all the way back up. That takes billions of dollars to push all of that red out of the way. And even if all of the red's not erased, if the majority of the red is erased, it's still powerful. Erased, it's still powerful. So this momentum up, boom, leads higher. This momentum back up leads higher. Momentum back up leads higher. Momentum back up leads higher. These 4 bars right now are the only 4 bars you need. But wait a minute, hold the phone. You need them to form at the right frickin' location. They're not important at wrong locations. They're only important at the right location, traders. We need the elephant bar right here. Whoo! We need the bottoming tail bar in the sweet spot, whether it's the red one, the green one, or the no color one. Doesn't matter. As long as it's in the sweet spot. But if you put an elephant bar, a green elephant bar, way up here, it's not powerful. Its power is derived by its position. You put one of these bottoming tail bars way up here, it actually means the opposite. It means up from the right position. It means down from the wrong position. And this is where a lot of traders lose a lot of money. They don't know position, because position is what turns your item good or bad. It's position that gives your item value or no value. Just like in the real estate market, location, location, location. You can build the biggest, most beautiful mansion in the freaking ghetto with crime running rampant, and that mansion won't fetch near what it would fetch if you built that mansion in the best area with practically zero crime and the best school systems. Same mansion, same house, different location, different value. Same here. You've got to know your position. You've got to know your location. Location gives your item value or takes value away. All right, let's go. Whoo, I love this. So we have the 4 power bars. I don't care which one the market gives me. A lot of traders say, Oliver, elephants, tails, I don't care. The first one that presents itself is mine. Boom. I'm an equal opportunity employer. You can be red, You can be green, you can be black, you can be big and fat. I don't care. As long as you're in the right position, I'm ready. All right. Woo! And these are the negative ones. Solid fat elephant bar means down in the right location. Red with a topping tail bar, this is like an arrow, means down. Arrow means down, even if it's a little green there. No color, but with the arrow, the tail means down. As long as this, or this, or this is in the right location. What's the right location? You remember. It's there. So you give me a nice, fat, juicy, solid red bar here, and I am salivating. You give me a topping tail bar that's red here, I am salivating. You give me a green one, makes no difference to me. Equal opportunity employer. Boom. No color, that's okay. You're albino, that's fine. If you're in the right location, I'll take you too. Boom! All the colors, all the sizes, all the genders. I'm there. As long as it's in the right position. All right. So let's talk about the power trading game. Let's go. I want you to imagine that this is Microsoft. Let's say Microsoft as an example. Microsoft has experienced its first 2-minute bar of the day. Wow. It opened up just above the 20 and the 200. The 20 and the 200 are in a tight, narrow state, and I've got the sweet spot location. And oh my God, it has formed a nice, solid, fat elephant bar. In the sweet spot, what am I going to do? You have your $50,000 trading account. Remember that? You got $50,000. Or here's what you're going to do. You're going to mark the high of that bar off. Whether it's an elephant bar or a tail bar, you're an equal opportunity employer. Makes no difference. You're going to mark the high off of that bar. Once that 2-minute bar finishes, mark that high off mentally. Get that high price locked in and get ready. The very next time any subsequent bar trades 1 penny above the high of that first bar, boom! You're going to take half of your money. That's right. Not 5,000, not 10,000, not 15. We're not baby traders here. I don't like I like my babies, but I like my baby traders playing aggressive. We dump 1/2 of the account in the stock, 25,000 right there. We're leaving the rest for adding to the winning play if it's a win. Now, some traders say, well, Oliver, if you like aggressive traders, why not have them put the whole 50,000 in? No, that would be gambling. We put half in so that if we're wrong, we lose on half. If this starts winning, we add the other half to the winning play. We now have proof enough that it's winning, so let's feed some more money to it. Usually, your losing plays are going to be right away. And if they're right away, I'd rather your losing plays be on half the account than on 100% of the account. And this is going to serve you well. Never go in all at once the first play. Leave some for adding. $25,000. Guys, now listen. You wait. This is very important. You wait for this bar to finish. But you don't wait for this bar to finish. You don't buy it here after it's finished. You buy it 1 penny as it crosses. This bar you bought here, and this bar continued to go up after you bought it. So don't misunderstand this point, because if you do, you'll find yourself missing some of the greatest plays of your life where the stock winds up finishing the bar like that, and you're buying up here like an idiot. Right? We wanted 1 penny above the high of bar 1. And if that happens 2 seconds into the second bar, so be it. Boom! Your next act is to place your protection 1 penny under bar 1. I'm going to repeat that. Your next act after committing $25,000 is to protect the play, to protect the money, to protect the account, to protect your funding. No, my funding. That protection is 1 penny under bar 1. Now listen to this. You will rarely, if ever, lose more than 1 bar. You see, if this stock fails on you right from here, your loss is there. So you have lost the distance of 1 bar. But traders, listen to me. When you win, you will win 22 bars. Every time you lose, you'll lose 1 bar. But when you win, you'll win 16 bars. You'll lose 1 bar, but you'll win 8 bars. You'll lose 1 bar, but you'll win 30 bars. You'll lose 1 bar, but you'll win 4 bars. You'll lose 1 bar, but you'll win 10 bars. You'll lose 1 bar, but you'll win 3 bars. You will never substantially lose more than 1 bar. And I will tell you that if you keep this law anchored into your reality, into your trading plan, you will be in this game forever. Do you know that just by mistake the market goes up 4 bars, 6 bars, 8 bars, 10 bars, 12 bars? It doesn't need your help to go up. If you buy here in the market, and this market goes up 8 bars, boom, 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 what did you do? Absolutely nothing except pray. The market doesn't need your help to go up. The market doesn't need your help to make money. In fact, it is not your job to make money. It's the market's job to make money. It's the stock's job to make money. You only have one responsibility after you buy: to get out here if it doesn't work. Listen to me carefully, traders. This is one of the key reasons people never make it in this game. They don't cut their losses. They don't eliminate where they're supposed to eliminate out of ego, out of the inability to admit that they're wrong, the inability to take the loss and move on. This is a life lesson. Life is full of losses. Up to the brim. Those who live life well have learned when to take a loss. If that is a lesson you have not learned, I will promise you that you will lose everything you own. Whether it's in trading or whether it's in life in general, because trading is nothing more than a microcosmic version of life. It teaches you all the proper lessons of life. When to call it quits on a trade translates into when to call it quits in a relationship. When to call it quits with the friend who keeps talking behind your back. When is it time to fold the business and start a new one? When is it time to surrender in war, lest be completely annihilated and destroyed? When is it time to add, to double down on your efforts in life? When is it time to take the chips off the table, even though you're winning? When is it time to end on top? Do you know how many people in life don't know how to end on top? They don't know when to stop. How many boxers don't know when to stop in their career and wind up with brain damage? How many players play past their prime because they don't know how to end at the top, like I'm teaching you, to end away from the 20 while you're on top? Trading is life. And it is impossible to become good at this. It is impossible to become a talented, disciplined trader and not have that talent and discipline spill into every other corner of your life. How can you be disciplined as a trader and not be disciplined as a father, as a husband, as a wife, as a teacher, as an employee, or as an employer, or as a worshiper of your God? Discipline doesn't just form and say, okay, I'm going to stay over here. You've moved to another area, so discipline says, I'm not following you. No, discipline is discipline is discipline. You become a disciplined trader and you become a disciplined individual, a disciplined human being. You become a responsible trader and you become a responsible father, a responsible mother, a responsible employer, a responsible business owner, a responsible member of your society, a responsible member of your church, a responsible worshiper of your God. Responsibility is universal. Discipline is universal. And so as you're working on your trading, you're working on yourself. You're working on your soul. You're working on you as a human being. The same characteristics that are called for to be exacting in this craft, to be responsible, to be disciplined, the same characteristics that call for you doing what you're supposed to do every time are the same characteristics that are called for success in any endeavor in life. Trading is universal. Trading is life. And I'll go as far as saying that trading is spiritual. Why is it spiritual? Because you have to work on becoming better. In any endeavor that works on you becoming better, you becoming more responsible, you becoming more disciplined, you keeping your word. I will not lose more than $300 on any given day. That's your promise. How many people in life keep their promises? Trading is not just about buying something for $1 and selling it for $2. It's spiritual because you have to master yourself before you can master the markets. And that makes it spiritual. I love this game. Not only for what it can. Today, I love it not only for what it can give me. I love it for what it gives others. It gives them life. It gives them a future. It gives them a new sense of power. It forces them to look at themselves, to correct their errors, to plug up the holes, to fix the mistakes, to be more responsible. And it teaches them to end on top. All right, that's my sermon for today, guys. You know, I always got to give you a sermon every single day. At least one little one. That's my sermon today, guys. All right? You guys know it? You understand? You guys understand this. And I hope you don't mind these things because I get, guys, I tell you, I just get tired of people looking at this like, looking at this activity called trading like there's nothing creative about it. It's nothing. It's not an activity that gives anything to the world. This is so terribly true. Untrue, I should say. Terribly untrue. Because it makes you a better person. and you take that better person into all of your endeavors throughout life. Right? It is impossible to become better as an individual, more responsible, more disciplined, and not have that spill over into every other category of your life. And who doesn't want someone who keeps their word more? I won't lose more than 300. I won't lose more than 600 in a week. That's my promise. That's my word. Scout's honor. And if you can't keep your word, if you can't keep your own word to yourself, how can you keep your word to your children or your spouse or your God? You can't. It starts here with trading. Right? But we're going to keep our words, right? No more than 300, no more than 600. We're going to buy 1 penny above the elephant bar. We're going to put our stop 1 penny below the elephant bar and never, ever make exceptions, right? That's our word, Scout's honor. That's our bond. Your word is your bond. All right, guys, let's go. Yeah! All right. Okay, you get the tail bar? Who cares? We're equal opportunity employers. Mark the high of that tail bar off. It's in the sweet spot. It's in that great location. Boom, 1 penny above that high. We're waiting. We're salivating. Hands on the keyboard. Get ready. Get your 25,000 ready. Load it up. Get ready. Boom! 25,000 in and boom! Protection 1 penny under that low. Now, it is not your responsibility to do anything else but get out here. You don't help the stock move up. You don't do anything except pray. You want to pray? Okay, fine. That's the only thing you got to do other than get out here. This is your job. You see, the stock and you have a partnership. And the novice, unskilled players out there in the world, they get this partnership wrong. It is, your partner is the stock. The moment you buy it, you've got a partner. So the stock says, okay, boss. Okay, partner or boss. Let's say boss. He says, okay, boss, I'm going to do my very best to make us money. You've given me the ball. You've given me the pouch with 25,000. Now I'm going to run my best with this 25,000 and try to get more. But boss, if the enemy is too strong today, if I can't fight them off, I need you to stop me, boss. You see, boss, I can't stop myself. Only you can stop me. If you don't stop me, they will kill me, boss. Please, I need your word. Stop me. Stop the game here, boss. Because if you don't, I will die. Will you protect me, boss? Will you stop the game for me here if today they're just too much for me? And you're supposed to say, well, of course I will. You're safe in my hands. The moment you get here, I will save you. All right, boss. All right, boss. I'm ready. Let's go. Boom! And that's the attitude you have to have. You've got to save the stock. It can't save itself. So your biggest responsibility is to stop out. Now, the stock's responsibility is to make money. You do nothing but sit there and sip on your coffee. So you both have a responsibility. Yours is here, the stock's is there. Leave the stock alone and let the stock do its job. You stay posted here and do your job. But no, those untrained traders want to do this job. But when it comes time for them to do this job, they put their head in the sand I don't know how to draw a giraffe, but and think that maybe everything will be okay if I just put my head underground for a little bit. I won't see the damage. And when I pull my head back up, maybe it'll be back up. Do your freaking job and move on. And get out of the stock's way and let the stock do its job. Okay, I know I beat that dead horse to death. I beat that horse to death. I know I spent a lot of time on that, but guys, this is one of the most critical things. Understanding the relationship you and the stock has, and understand which part of the responsibility falls on the stocks, which is your responsibility, which is your most important responsibility is stopping the game. It's not making money. When I ask novices, what is your job? What is your function? What are you supposed to do as a trader? Make money? No. That's the market's job. That's the stock's job. Now, start again. What's your responsibility? Well, if it's not to make money, then what is it? It's to not frickin' lose money. That's your number one job. If you don't lose it, and this is not, I don't consider 1 bar money, but 2 bars is money. 1 bar doesn't equal money. 2 bars equals money. Stopping out here equals money. Stopping out here doesn't equal money. So don't lose money. If you keep stopping out here every time this happens, stop out here. Don't worry, just keep stopping out. You will get your fair shares of 15 bars up, 20 bars up, 8 bars up, 4 bars up, 16 bars up, 3 bars up. You'll get your share of these. Just do your job. All right, done. Okay. Oh, now guys, here's Roku again from yesterday. No, this is from the other day. This is not from yesterday. This is the 20th. Sorry, the 20th. But oh my God, I had some traders make a killing off of this day. Whew, that's why I included it here. I had to. So look, guys, every bar is 2 minutes. This is the first bar of the morning, the first 2-minute period. Look at the relatively narrow state of your 20 and your 200. Boom, after that first bar finishes, mark that high off. 1 penny above the high, come from way over here, remember. Boom, 25,000 in. 25. Put that stop 1 penny under the low. Now go. You get away from the 20 somewhere up here, you should be taking. If you bought 25, you should be coming out 10. 10. As it goes a little higher, 5 out. Do not let this drop back before you get at least some off or out. You should be able to look at this chart and know exactly to the penny. Oliver, I buy 1 penny here. How much? 25. Then what do? I put my stop 1 penny under the low. Great. Then what do? Well, I drink coffee, Oliver. Until what? Until I get away from the 20. Well, what if you don't get away from the 20? Well, I'm waiting down here. So do you mean that you're either going to get away from the 20 or get stopped out? Absolutely, Oliver. And that should be your response. Until I teach you when to move your protection up, which is coming. But until then, it's boom or bust, baby. You get away from the 20 or you stop out. You get away from the 20 or you stop out. One more time. You get away from the 20 or you stop out. Boom or bust. And some of the biggest traders in the world are boom or bust traders. There's nothing wrong with that approach. Because they're picking the right events at the right location. So 7, 8 times out of 10, they get this. Only about 2 times out of 10 they get that. And they just repeat, 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 repeat. 10 more. 7 to 8 wins, 1 to 2 losses. 3 losses sometimes. 7 to 8 wins, 1, 2, 3 losses. 7 to 8 wins, 1, 2, 3 losses. 7 to 8 wins, 1, 2, 3 losses. And that becomes your life. Until you start perfecting it and get to where I am. But you can make a living right there. All right. Look at Disney. Look at the close proximity of the 20 and the 200. Look at the first 2-minute bar of the morning. Here's your 2-minute chart. Now it started below, but it ended green and above. That's fine. Mark that high off. Come from way over here. Boom! How much? 25. Half of whatever you have. If you are at the 100 level, then it becomes 50,000. If you are at the 500,000 account level, you're putting $250,000 on the line right there. This is why we must trade quality stocks. People say, Oliver, what about the penny stocks? Why are you asking me about the penny stocks when you won't even bend over to pick a penny up on the way to your Uber? So if you won't pick a penny off the ground, rushing for your Uber, why should you be dealing with that nonsense with your real capital? Give me a break. Penny stocks. It's a poor man's racetrack. No, you're going to have enough money to play the market the real, right, professional way. The only reason people are fooling around with penny stocks is because they're broke and don't have access to capital. But that is a losing game. And it's a very rigged and manipulated game. You can't manipulate Disney like that. You can't manipulate Microsoft, Facebook, Twitter, QCOM, Bank of America. You can't manipulate Starbucks like that. We play true quality things. Where's your stop? 1 penny under the low. Now, this is coming up next, but let me give you a little bit of an advance warning here. I am teaching you the power game now. Remember the 3 power bars: elephant, tail, and the 3 tails, right? The 3 tail variations. As long as any one of these is in the right location, here or there on the way down, right? Wow. We're in business. This will be the case every single day of your life. After your initial entry with 25, you still have 25,000 left. What do you do with that? Well, you break it up into 2 parts. So you take the remaining 25, divide it by 2. And it doesn't have to be even, 113, 112, doesn't matter. All right? And then you play the color game. So the initial is the power game most of the time. And the second half is the color game, power and color. So now, the very next time green takes out red near the 20, boom! Take the half. Boom! And then the very next time, again, you got this half left. Green takes out red. Boom! Boom! And you add to the winning play twice until you run out of money. Do you ever get away from the 20 here? No. I love that sound. Don't you love that sound? Let's do it again. Wait a minute. Boom, boom, boom. Now that's the sound. That's a $100 bill counter. Now I know some of you have the $100 bill counter, but it sounds like this. Yeah, that's right. It sounds like this. It's like one bill going around there. But that's better than some people. Their money machine sounds like this. Silence. Guys, I'm crazy. I'm sorry. I'm crazy. I know it. You don't have to tell me. No, we want that sound. We want that sound like this. Boom. Protection. Boom. Boom. Now, you know what else I have to teach you? I've got to teach you that you can't keep your stop there while this keeps going up. You've got nice gains here. You can't let this drop all the way back and take your money away like you're a chump. An idiot. So I got to teach you how to move that stop. So the first way you're going to move it is you're going to wait for the next fat solid bar. And you're going to move it under the fat solid bar. Boom. Here's the next one. Boom. And here's the next one. You move it under. After it's finished, boom. Where is there a next one? There is no, maybe here. Boom. And you're stopped out. So every time there's a solid, decent bar that finishes, move your protection under that one. Walk that bad baby up. Big bar by big bar. Maybe here. Oh no. All right. That's protection adjustment 1. Now, I teach my traders that there's 7 ways we adjust. 7 adjustments. I'm going to teach you 2 of the 7. So you have 1. The big bar is 1 of the 7. The big bar. And guys, try to make them pretty sizable. That's kind of like a normal bar. Right? Even this and that. This like I'm stretching it. These are like kind of normal greens. This is sizable. I'll take this and I'll take that one. Okay? Normal size. Little, but normal. Okay? All right, so we got 2 stop adjustments if we really are strict. 1 and, well, no, here we got 1 and 2. All right? So at least now, if we lose, we're going to lose profitably, right? For the most part. But there's one more I have to teach you. I want you to use what I call the color stop adjustment as well. So, what is the color stop adjustment? When you have a red bar that is followed by 2 green, adjust under the red. A red bar right there. Green, adjust under the red. Red bar, green, adjust under the red. You see? Red bar, green, adjust under the red. red bar, green, green, adjust under the red. So now you're going to take the color stop adjustment and you're going to combine it with the big bar stop adjustment, and you're going to have a little neat, little beautiful buddy system. You're not going to choose which one you like an idiot. Oh, Oliver, I like the big bar better than the color. And another one says, no, I like the color stop adjustment better than the big one. No, you don't pick and choose. You adjust to the one that happens next. So let's go over this. Stop. Initial. Solid bar stop adjustment. Boom. Red bar, green, green, color stop adjustment. Red bar, green up, big bar green, now under the big bar. Red bar, green, green, color stop adjustment. No big bar, no big bar. Red, one green, no second green. Green, stop adjustment. It doesn't have to come consecutively. Red, green, green, stop adjustment. Red, green, green, stop adjustment. You will walk your way to the promised land. This is professional walking. This is being paid to walk. How many people in life get paid to walk? Walk those prophets up. Walk those prophets to the promised land. Do you know how many traders in this world have no freaking clue how to manage a trade? Do you have any clue, guys? Any clue whatsoever? How many traders have no clue how to manage, how to adjust? They're constantly in fear. I got a little bit of profits. Should I take it? They see a little red bar and they freak out and cut the win. Most traders on that play would never capture that whole move. Do you understand? Because they don't know how to manage a move. They don't know when a red bar is serious enough to act on it. They don't know when and where to confidently and calmly move the stop and ignore the little wrinkles that the stock's going to do. And so they never capture big gains. They only capture big losses, and they cut their gains because of fear of the gain, the little bit of gain they have, disappearing. In fact, they experience their emotions in the wrong order. So when their stop gets violated, they hope and pray. What do they hope for? They hope the loss comes back. They hope the stopped out stop rebounds. They hope they get their money back. They hope, they hope, they hope. They pray, they pray, they pray. Down here. Stop out. But when they buy and the stock moves up and it makes them a little bit of money, they fear. Fear. Imagine that. They're winning, but they fear. Fear what? Fear that my few dollars is going to disappear. Oh my God, it's a red bar, it's a red bar. And they snatch at the game. But wait a minute. Shouldn't you fear down here? Fear that it could keep going. Fear that you could get your heart taken from you. Fear that you could lose your whole account. Fear that you could get kicked out of Oliver's trading program. That's where you fear, not up here. The novices, the untrained novices, they have it wrong. They have it backwards every single time. They fear when they should hope, and they hope when they should fear. When you're winning, that's when you pray and you hope for the big one. I'm winning. This is going. Now I'm hoping it keeps going. Now I'm hoping I can grow this into something substantial. Now I'm praying. Now I'm hoping. I don't hope here. I hope there. Tell me you understand what I'm saying. You're never going to get these things backwards again. No, not under my watch. I won't allow you to. I will not allow you to. Do you understand? All right? All right, guys. I'm not done with you yet. See, we're all in lockdown and quarantine out here. So I've got some extra time. I hope you too. Unless you have somewhere to go. You got somewhere to go? Oh, yeah. You, getting dressed up to go to your living room? All right, guys, let's get back. Woo! All right. All right. What are we doing here? Look at Facebook from 2 days ago. Was this 2 days ago? Yes, 2 days ago I think it was, right? Yes. 2-minute chart. Look at the first bar of the morning. That's one of our power bars. That's the bottoming tail bar. Look, moving average is relatively close. They don't have to be touching, just not far away and separated from each other. Now, take that bottoming tail bar. That's the first 2 minutes. Mark off that high. Now you start salivating. Your hands on the keyboard. You've loaded that 25,000. And the moment, the instant, the nanosecond, the second bar clears the high by 1 penny. Boom! 25,000 in. Dump half in. Put that protection under the low. Boom! Away from the 20. So you entered near the 20. You gotta get out away from the 20. All right? Beautiful. Beautiful. All right. You know how to do this now. Let's take a look at some examples. Now, take a look at Intel on this chart, 2-minute chart. This is a 2-minute bar of Intel. All right? 2-minute bar. What are you supposed to do? You should know this by now. I want you, your 2-minute bar is finished. You watched it calmly form. You're a tiny bit excited because you know what's about to happen. You're going to mark the high. You're going to mark the high of that bar off. Boom! You're going to load that 25,000 in that platform. Get it ready. You're going to put your hand on the buy button. And the minute, the second, no, the nanosecond, any subsequent bar trades 1 penny above the high. Boom! 25,000 in. No questions. No analysis. No doubting. No thinking. No guessing. No wondering. Boom! Your next step, you know what it is, your most important one, that protection. As you move away from your original entry, you want to make sure you start taking some of that 25,000 off. You may not have to take all of it. That's something I teach my traders, when to take all and when to take part. Take some of that 25,000 off there, though. You're up from here and away. All right? Now, guys, I just want to give you a general idea. Let's see, this is here. Well, let's do it after the trade. Let's see. talking. All right, so you're talking like a little bit more than 50 cents, 60 cents or so. Guys, with 1,000 shares, that's $600. $600 with 1,000 shares in 2, 4, 6, 8, 10, 12 minutes done. $600, 1,000 shares. Oh, okay. So you didn't do 1,000 shares, you did 500 shares? Okay, that's $300. There are people who work all month for $300. 6 minutes. Oh, wait a minute. You didn't do 1,000, you did 20. All right, so it's 100 shares. It's $100 in 6 minutes. There are people who work all week for $100 in this world. But we can repeat this over and over and over and over again, multiple times a day. Look at the color game, traders. Near the 20, green takes out red. Boom. Near the 20, green takes out red. Green takes out red. This is not, you're not just locked into one opportunity. Now multiply this times 10 stocks. You won't have enough money to play everything. A lot of people come up to me at cocktail parties and social events and, Oliver, you think I can trade? I said, well, can you count to 2? What do you mean, Oliver? Can you count to 2? 1, 2? Hey, you can. All right. Can you follow red bars and green bars? Red bars and green bars? Yeah, Oliver, I think so. Well, what about 2 lines? Can you follow a blue 20-period moving average line and a 200 moving average line, boys and girls? So, boys and girls, there's green bars and red bars. There's 20s and 200s. There's above the moving average and averages and below the moving averages. There's near the 20 and away from the 20. So yeah, if you can do those basic things, I can teach you to trade. The question for me to you is, will you do it? You see, knowing what to do doesn't mean you'll do it. You know you should go to the gym. Do you go? You know you should pray every night. Do you pray every night? You know what you should be doing with your kids. Do you do it? You know how you should be eating. Do you do it? You know you shouldn't be smoking. Do you do it? So knowing what to do is not the answer. You've got to do it. This is a partnership. I want to take you and I want to teach you everything I know. I want to dump my whole 33 years inside of you. I want to hold nothing back. This is a small piece of it. I want to give you everything every day of your life. I want to train you every day of your life. Never will there be a day you are not trained, educated, dealt with, in front of people trading in your face every day, taking care of every single one of your questions, guiding you, directing you until you get this. Because let me tell you this, as long as you have a single penny of my money in your hands, I will do everything in my power to prevent you from losing it. As long as you have my capital in your hands, my feet held to the fire. Do you understand this? I am not an idiot. I will not allow you to put me out of business. I will not allow you to break me. So this relationship keeps us honest, but it is a relationship. This is a partnership. I can only teach you. I can only train you. I can only show you over and over and over and over again that this is valid, this works, this is powerful. but I can't make you do it. That's got to come from you. No one puts a gun to your head. No one forces you to press the buy button right here. No one forces you to exit right here. That's got to come from you. And yes, there are many traders that don't do what they know. Ego, fear, greed. They don't take here because they're looking for here. They don't take here because they hope and pray. They don't get in here because they got hit and lost money here, so they don't do what they know they should do here and miss the win that was theirs. There are many traders that know what to do, traders, but they won't do it. I can't help them. All I can do is teach you and show you every single day of your life. And that's what I do. My traders are with me for life. I never fire a trader unless it's for something very, very serious. But I never fire a trader. I don't care how long it takes you to develop. It took me 6 years. 6 years of losing money. I was down over $750,000 before I made my turn. Almost $750,000. I was negative, on the verge of giving up. And it wasn't even my money. I had to pay that money back. You guys don't know loss. I know loss. You don't know loss. I don't care if it takes you 1 year, 2 years, 5 years, 10 years. I will back you and support you as long as you are giving it a true effort of doing the right thing. Everyone's different. Everyone develops differently. All right, guys, let's look at another example here. Here we got Western Digital Corp, a company called Western Digital Corp. Look at that tight state. Look at that 20. Look at that 200. Look at that stop. Look at how everything is nice and tight. Whoo! Now, you know what to do. That first 2-minute bar has finished. Boom! Mark off the high. Load that 25,000 in. Put that finger on that buy button. Get ready. If you start salivating, don't wipe. Don't ever wipe your saliva until after the trade. That's law number 5. No wiping. Boom! 25,000 in. It doesn't have to happen on the second bar. It can happen on the third bar like here. Put that stop in. And look what happens. Look at what I'm circling here. Now this brings me to the next law after the no wiping law. This is law number 6. Okay? No wiping law. Law number 6. You must add on the very next color game opportunity after a power game opportunity. I'm going to repeat that 2 more times. After you have bought a power play, you must add on the very next color play. No questions asked. That is a law. You don't have to, by law, do the second color, but the first one you have to. So the very first time after power, we played a power bar. So the very first time a red bar gets violated by a green bar, there are no choices. You must add 1/2 of what you have remaining next. So it's 25, right? Goes to 25, and then you split 1/2 of the remaining 25, right? Into 2 more additional lots. So your original was 25 here. And Now you're taking one of your parts and doing it there. Boom. Mandatory color play after the power play. Mandatory. All right? The others aren't. Now, if you want to, you can do this color play. Look at this red bar that gets eliminated by that green bar. You can add that other one, or even this red one gets eliminated here. Boom. These are not mandatory, but the first one is. Now, the only exception I would give to you is that if the first color play is too far away, I wouldn't do it. All right? That's the only mandatory rule. The only caveat, I should say. All right. So let's talk a little bit more about this color game, shall we? This is what I'm talking about. If your first play was off a power play, then you got a mandatory add on the next color play. As long as it's not too high. All right? Now, I also want you to know that it is possible to not have the first play a power play. What if this is the first bar of the day? Let me show you. If red is your first bar but in the right location, you then mark the high of red and look to buy if red is taken out. It doesn't mean that it has to be taken out. It can keep going down. But if it doesn't and gets its high taken out, your first play is the color game. So sometimes your first play is the color game. Sometimes your first play is the power game. Doesn't matter. You're not choosing. You're just waiting. And that's a very important point, traders. Professional traders wait. They don't choose. They wait for the opportunity to come to them. And they don't care. They're equal opportunity traders. They don't care if the color game comes first. They don't care if the elephant comes first. They don't care if the tail bar comes first. It doesn't matter. What matters more is the position. All right. Boom. Now, here's Micron Technology, a company called Micron Technology, MU, first 2-minute bar. All right. Again, it's not super far above, so we're okay here. I mean, lower is better, but this is okay too. All right. Nice and relatively narrow there, not like that. Right? Okay. Now, what are you going to do? You know what to do. You're going to mark that high off. Boom! Boom! 25,000 in. Stop. Boom. First red bar. Boom. Mark that high off. Boom. Add. As soon as a green bar takes out the high of that red bar. Now you got your second lot in. Take some profits. You've moved to that dual separation I've talked to you about. End the game on top. Let this be a rule in life too. End it on top of the mountain. End it when you're at your best. All right. Love it. Boom. Nothing. All right. Okay. Now look, guys. I want you to know that my average trading day is 18 minutes. And I'm done. Because this is usually where I live. Look at this, 2, 4, 6, 8, 10, 12, 14, 16, 18. This is a little bit longer. But on average, because some days are 6 minutes, some days are 8 minutes, some days are 20 minutes, some days are 30 minutes. But average is 18 minutes. That's the beautiful thing about this game. You don't have to sit there and develop blurry eyes and get a bad bladder staring at your computer monitor for 8 hours a day. You can if you want to, but that's not necessary. The best time to do this is right there, right off the open. First 30 minutes, out, done, finished, gone. Enjoy your day. Go to the beach, go to the park once quarantine is lifted. Go to the mall, walk your dog around the block, watch television, do whatever it is that you do. Don't be a one-dimensional trader. Person, have some other interest, have another hobby. Let this pay for your life and all the hobbies you want to have during the rest of your day. I encourage that. I don't encourage that you sit there in a chair all day. Why turn the best business in the world, trading, into another 9-to-5 job? Why do that? That's the last thing you should want to do. Dude, I work 18 minutes and I'm done. I support my life 18, 20 minutes, I'm done. That's where I want you to be. That's what I'm going to train you to be, a 20-minute trader. And if you want to continue and have some lunch after your initial thing and come in here, all right, Oliver, green takes out red again near the 20. All right, Oliver, green takes out red again near the 20. All right, that's fine. But I'm gone. Right there. Here's my 4,000 to 6,000 or whatever it is for me. I'm out. Here's your $400 to $600. Or if you play really small, you're $40 to $60. Who cares? It's just getting these actions right. Whether it's a smaller size or a bigger size, it's the actions that are important. Now, walk this stock up for me. Remember I told you you get paid to walk here. This is a great business. You get paid to walk. Where can you get paid to walk? Trading. Walk that bad boy up. Where's that stop adjustment? Where's the next stop adjustment? Big bar. Boom. Where's that next stop adjustment? Red bar, green, green. Solid bar. Boom. Until you profit take. Now, as you're walking up that profit adjustment, right? You're hoping you don't have to use this. You're hoping your stock just gets away and you take it and you never have to use that. But just in case, boom, you're not letting this fall all the way back down, robbing you of this hard-earned gain. All right. Yes, I'm gonna turn you into some professional traders here. You guys probably don't even realize how professional this is. That right now you know to the penny. You can look at a chart and say, Oliver, okay, I buy here. And I say, where? You say, this penny. I'm like, to the penny? Yes, Oliver, to the penny. Where do you protect yourself? At this price right here. To the penny? Yes, Oliver, to the penny. Where do you add? Above the first color move. Where? To the penny? To the penny. How do you protect yourself? I adjust under every big bar and every color bar that's followed by the opposite color twice. To the penny, to the penny. When do you sell? When I get away from the 20 or when one of my stops gets violated? Do you know how many people in the world can do that? Not many. Not most people are guessing. Most people are feeling. Most people are reading some analyst report and just saying, well, the analyst said it's a buy, I guess I'll buy. You know how many people are just watching the news and just waiting for good news to buy? How idiotic. You know how many people destroy their lives because they didn't bother to get trained and thought they were smart enough to do it themselves? You know how many people think that gambling is the way you do this? Am I teaching you to gamble? Hell no. This is not gambling. This is taking. Listen to me carefully. This is important. I got to speak to you eye to eye right now. Listen to me carefully, traders. Listen. There are two types of traders in this world. I need you to understand this. There's depositors and there are withdrawers. There are those who put money in, and there are those who only pull money out. Withdraw, 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 withdraw. Which one you want to be? You want to put money in? I want to trade with my own money. No professional puts money in. I'm giving you a way to never put money in the game. I am giving you a way to only be a withdrawal. Withdraw from the game. Withdraw. The money comes from the depositors. They put money in and never pull money out because they're not trained, they're not educated, they're gambling, they're guessing, relying on those idiotic reports and news. That's where our money comes from. Do you understand this? Don't be a depositor. Depositors are there for us to withdraw. And we need a lot of them. Because if you do this right, you start to withdraw big. And you need hundreds of depositors to support your withdrawals. That is why this industry says, come on in. You can open an account in less than 3 minutes. How do you want to put it in? PayPal? Credit card? We can directly grab it from your bank account. They make depositing easy. And they tell you, yes, you can do it. The commissions are small. Yes, you can do it. Why? For me. Only 8% of this world withdraw. 8% of market participants withdraw. 92% deposit. Which side do you want to be on? You want to deposit your money? All right. I'll take it. All right, guys, let's get back. I gotta go. All right, boom. You see the first bar. Guys, this is boring now. This is boring. It's the same formula over and over again. How boring. It's supposed to be freaking boring. You want entertainment? Go to Disney World once quarantine is lifted. Don't look for entertainment here. Look for boredom. I do the same freaking thing every single day, and I'm proud of it. I'm like a monkey. I do the same thing, the same formula, the same way. Buy 1 penny above the high. Stop 1 penny below the low. Boom. Boom. Add on the first red color bar, take out. Boom. Boom. Take profits once you move away from your entry and the 20. Stock drifts back toward the rising 20. You can continue playing the color game. Green takes out red. Boom. Here's another red bar. Green takes out that red near the 20. Boom. 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 I love this game. Oh my God. I love what I do. I love my life. I love my life. All right. We're coming toward the last part here now, guys. Coming toward the last part here. Look, check this out. What if, you know this, I'm going to breeze through this part. If it's a red bar, you do nothing. Because if this red bar is down here, that's when it's juicy. Boom, we're looking for that. But if it's up here in positive territory, in the buy location, you do nothing. Please understand that. This could just do that, and it's nothing. Okay, now, but if, boom, boom, green wipes that red away, you get in there with that $25,000. You put that stop below that green bar's low and do the same formula. The next color bar, play another part and raise your stop on the next big bar. Raise your stop on the next color bar. Take profits away. Repeat, 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 repeat. Oh, sorry about that. Okay. Red bar in positive territory. You do nothing. But if, maybe not, but if, boom, 25,000 in, stop below the low. Several bar move away from the 20. Make sure you take some profits. Drift back. Color. Boom! Away again. Out. Done. Go to the beach. Go to the park. Walk your dog. Watch television. Go to the mall. Do whatever it is you want to do. Check this out. It's crazy. Crazy, right? Sorry, guys. Just a laptop computer, internet connection, no employees, no partners to rely on, no waking up early in the morning and trekking to an office. You can trade from your kitchen, your living room, your balcony, your toilet, from some of the best hotels in the world, on some of the best beaches, from the amazing mountaintop over there to the lake right there. As long as there's an internet connection, you are in business with a simple laptop computer. Look at this laptop. That's what I trade off of. I don't trade off of those big giant monstrosities. I used to. I'll be honest with you. I used to do that. But that was before the laptop era began. Because I want you mobile. Do you understand? I don't want you having to turn this into a regular job where, oh, I got to go back to this location to trade. Why? Would you trade from here? No, I got to go back. Why? Because I got 18 different monitors. I want you to be in your trading business no matter where you go. Your family wants to go on vacation to Tahiti, the shores of Tahiti, laptop computer in the back, you're in business. You never miss your first 20, 30, 40 minutes of the trading day, then it's family time. It's the best business in the world. Do you know how much money you have to invest to open a restaurant or a clothing store? Or if you're a plumber, to start your plumber business with the equipment and this and that, like just a laptop computer, that's it? That's it? And you're in business? And yes, you do have to pay a small monthly fee for your platform and your data. That is very true. That's your only cost. Every business has a cost, right? Some people's business, you pay a travel fee for a month. You buy a bus ticket, a train ticket. You take Uber in. You take taxi cabs around. You buy your lunches. Some of you have uniforms to pay for. Every business has cost. Every restaurant has cost. This business is no different. You've got a cost. It's a few dollars a day. As a professional trader, for a few dollars a day scares you, then this is not for you. But it's the best business, the lowest cost business in the world, and the most mobile business in the world. Just you and the markets. No one can stop you. No pandemic can ruin your business. It's amazing. And I've been telling people, I've been shouting this message from the rooftops for the last 26 years of my life. 26 years traveling the globe, spreading the gospel of trading. Now you know why. All right. All right. Here we got another example. Red bar sitting right there above those moving averages. Boom. Boom. Stop. Boom. Uh-oh. Red bar again. Mark that high off. Boom. More money. Away from the 20-period moving average. Take some profits. All right. Pull back a little bit closer. Red bar. Mark that high off. Boom. Boom. I always get on my traders when they try to do my boom, you know. Is it boom, Oliver, boom? No, it's not boom. It's boom. Boom, Oliver, boom, 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 boom. No, boom. Aggressive traders. That's what I want. My kids tell me that, Dad, you stopped growing up when you were like 17. That is true. I did. Peter Pan. All right, guys, I'm not even going through this anymore. You know exactly what to do. Here's the first bar of the morning. Boom, boom, boom. You got to be taking some profits up here somewhere. And I suggest you don't take everything. You take it incrementally. So you break up that part. So the boom, boom, boom. But we get into all of that with the really thorough training every day. All right. Here's another one. Guys, look. In summary, here, look. I'm not done yet, but in summary, here are your 3 power bars. That's the location. You know this by now. You should be sick and tired of this right now. All right? Now, boom, you're buying above the elephant. You're buying above the tail. You're buying above the red bar. Whichever one comes first. You're not a picker and chooser. You're just waiter. You're a waiter. You're waiting for whichever one to happen first. Let's talk quickly about shorts. Everything I taught you to do above is just reverse below. You get a red bar that opens below your 2 moving averages. You're going to mark the low. You're going to go short right here with 25,000. You're going to put your protection above the high, and you're going to bet that this thing is going to drop to the downside. Beautiful, beautiful, beautiful. As I told you, this is my preferred play. I much prefer to go short than I go long. Now, let's take a look at some of the examples. Here's a chart of Eli Lilly, a big giant drug company in the United States. First 2-minute bar is opening below both the 20-period moving average and the 200. I don't have this one blue, but you get the point. All right, there you go. You know what to do with this. Boom, mark that low off. Boom, 25,000 in. Boom, no, boom. Put that stop. I'm sorry if you have cats or dogs, and every time I do that, I know they're jumping. I'm sorry. But I get excited. Move away from your entry in the moving averages. Take some profits there, please. Uh-oh, green. Remember, you got to do the first one. First green bar. Boom, cracks the low. And there's that sound again. There's that sound. Don't you love it? Let's do another one. Oh, shoot. That's interesting. All right. You know the deal. Just mark this up for me. Do it in your mind. Mark it up. Mark it up. See, like I told you, you should be able to look at any chart right now and be like, okay, Oliver, I know exactly what I do. So do it right now. I'll give you a few seconds. Do it right now. I'll give you a few seconds. Do it. Uh-huh. Mark the low. Yeah. Uh-huh. Where's that stop? Yeah. I see you. Uh-huh. Ah, first color game? Yeah, uh-huh, I see you. Oh, wait a minute. Let's get paid for walking. Let's get paid for walking. Walk that stop down. Okay, I see you. Yeah! You got this. Mark the low of the first bar. Boom! Enter $25,000 as soon as this low gets violated. Boom! Protection. Boom! First color violation. Boom! Walk that stop down to the next fat bar. Boom! Uh-oh. What did I do here? Sorry, guys. Walk that stop down. Boom. Okay. Where's that next green, red? Drop that stop to the color. Where's the next big bar? Right here. Boom. Walk that stop down. Boom. Walk that stop down. But you're probably taking profits here. Away. Certainly here. You've gone from narrow to wide. Now, if anything, you're playing the color game this way. You know this. And you've got this. Guys, nothing else is, very few is left other than just repeat. Gain the experience. Get better, get tighter, get more perfect. And then boom! That's it. You know what to do. Look at your tight, narrow look at your tight state. Look at the first bar. Mark it off. Look at the color play. Red takes out green. Boom! Look at red takes out green. Boom! 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 How many opportunities? Oh my God. Now you're pretty wide. You've gone from narrow, look at that narrow, to now wide. The game is this way. The beautiful thing about trading is that it is just repeating the same formula every single time. Now here's one special thing I got to show you guys. Look. Take a look at this. Look at this one. Look at the narrow state. Look at your first bar. Under normal circumstances, you mark the low. All right? Here's a little green bar there. Under the green bar, you're far away. You're taking profits down in these areas, right? Okay. Now, take a look at this. I want you to know that if you get a green bar under here, you do nothing, because the green bar is only significant there. Here it means nothing unless red takes it out. Now let's go back to this. Let's go back to this chart. I want you to look. You see this bar, this chart opens like this. Let me show you. This chart opened right there and moved up first. You see? It moved up first. Let me go back and show you. So first, it opens the morning here. Then first it moves up to produce a green bar. Then it moves down to erase all of the green. And then it keeps going. So look, in reality, you have this scenario. You have the green up first, then the red removal of green inside of the same bar. So instead of the red taking out the green in bar number 2, you have it, the red takes it out in the same bar. Boom! So now check it out. This is the real professional play. Boom, green up. You're watching this as it's going. And then you're watching the green disappear. Boom! And once there's one penny under the green that used to be there, that's your entry, not here. That's called the hidden green. The hidden green. That green bar is hiding from you right there. It's hiding from you. It was there, and now it's not. It's hiding from you. But we don't even let the hidden greens go by. Now, this is an advanced technique. Find the next hidden green. Go down a few bars, look at a move up, green, and then in the same bar, a move down to eliminate the green. Do you see it? Remember, move up first, then move down to eliminate the green. You see it? That's right. Move up, green, mark that off, and then boom, that's your first color play right there. Whoo! You gotta love it. Boom! Because this was green. So it doesn't matter whether the green gets eliminated on the next bar or on the same bar. It's the same thing. Same bar. Same bar. Next bar. Because this bar is green. Doesn't matter. We're an equal opportunity trader. We don't discriminate. Boom! Boom! All right, you know what to do here. Look at the tight, narrow state. Look at the green bar beneath. So remember, you do nothing. We're in negative territory, but we got a positive bar. But boom! Red finally eliminates the green. That's your entry. Stop above the high. Now you get your next green. Mark that low. Boom! Mandatory. Now, get paid for walking. Walk that stock down. Boom, fat bar, stop adjustment. Nice. All right. You know this. Boom, walk that stock down. Boom, far, look, this is green, right? But you're far away now. You better be eliminating the trade, because this deep is going to like that. Saw it? Yep. Look, some of you might be thinking, right, that Oliver just like picked the perfect examples to show us, and no. When I tell you that what I teach happens so frequently and so many times a day that you will never have enough money to play them all. You'll want to play them all. Guys, you understand that the reason I do this is because I can't play them all. People say, Oliver, why do you recruit traders? Why do you travel and speak and recruit traders? I'm like, you don't get it. You don't understand. What do you mean? Think about this. I'm playing the elephant bar in Microsoft at the perfect location. Wow. But what about the elephant bar in Twitter at the perfect location? What about the tail bar in Starbucks at the right location? What about the opportunity in Apple while I'm playing Microsoft? What about the opportunity in Facebook? The opportunity in PayPal? The opportunity in Uber? The opportunity in Disney? The opportunity in Nike? I can't be at every opportunity at the same time. So what do? I say, look, you take this money. Let me give you my eyes, my skill, my ability. Now, I will do Microsoft, you do Starbucks. You do Facebook. You do Twitter. Don't miss. I won't miss Microsoft. You don't miss Twitter. You don't miss Starbucks. You don't miss Facebook. And I freaking grab it all. So instead of me one opportunity at a time, it's now 70, 80 opportunities at a time. Every time I'm playing Microsoft, someone's playing Baba, someone's playing Starbucks, someone's playing Facebook, someone's playing on my team another opportunity that I could not get to. That's why I do this. So I make freaking 1 + 1 = 1,000. I'm a nice guy, but this is not philanthropy. And I will tell you this, I don't sell courses. I'm not interested in selling you a course. You understand? I am tired of people out there saying, Oliver sells courses. I don't sell courses. I recruit traders. Is there a cost to set you up in business? Yes, of course. Any business. And if you don't understand that, you're just not a business person. But there's one small cost for the rest of your life. One small cost to be in the best business in the world, and a cost low enough where you don't ever have to invest your own funds in the business. It's crazy. A business where you can get more money to expand your business, more money to expand your business. I'm not in the course business. I have no interest in teaching you if you don't want to be a trader of mine. I did that at Pristine for 12 years. I was the biggest educational trading firm in the world for 12 years. I tired of that. I moved to funding my own traders. So let me tell you this. I can't control whether or not you join me and never use my money just to learn. I can't control that. But that is not why I do this. I do this, and every person I train gets an account. Whether you use it or not, you get it. Because that's my goal. I left the training business a decade ago. So I'm not here to sell you a program. I don't do that. I'm here to get another set of eyes. I'm here to get another player so that I miss less, you miss less. There's power in numbers. This is how firms like Goldman Sachs have been formed. It used to be Goldman, then it was Sachs, now it's 8,000 freaking traders around the world. This is how it's done. The biggest hedge funds are built this way. This is how you get there. And if you tell me, yeah, but Oliver, these people don't pay to join the company. These traders that trade for these Wall Street firms, they're actually not, they don't have to pay to get in. Like, what world do you live in? What do you mean they don't have to pay to get in? They won't hire any person who has not put $500,000 into an Ivy League education first. Everyone pays. They require that you get a degree from this list of schools, otherwise you can't enter. That's not paying for your education first? And then here's money to trade with? That's not paying first? That's paying big first. Everyone in this game pays something up front first. And this is no exception. But I just wanted to clarify some of those silly things. Like, Oliver, why do you teach? Because I want to make more money. What do you mean? Me plus you means more money for both of us. That's crazy. I can only capture one or two at a time. But there are hundreds that are happening every moment of the day. So when I'm on an airplane flying to Cancun, Mexico, when I get off the plane, the first thing I check is how much you made, my team made while I was on that plane. If I'm in a meeting and I'm not trading, it's the afternoon, as soon as I get off that meeting, I check how much money did my team make me while I was in that meeting. This is business. This is not courses. All right, guys, let's go. Let me talk to you. Guys, look, the most popular program that I offer to set you up in your own trading business, I want you to understand this is your own business, is called the Self-Start program. Are there other programs? Yes. But this is the most popular one. And it should be where the vast majority of you start. But you've got to ask yourself a question. Do you think you have what it takes to be one of the 8%? Because let me stop you right here and let you know this. There's a 92% failure rate in this business. That's right, you heard me. Listen up clearly. Let me turn the frickin' volume up. There is a 92% failure rate in this business. That's right, out of every 100 people that try, 92 fail. Only 8 make it. Now, some years it's 12. Some years it's 5%. The highest year I ever saw was 18. And that was a fluke. We might get that this year because of the extra volatility. But I want you to understand this up front, that the odds are against you, traders. But let me also remind you of this. There is a 90+ failure rate for a business in general throughout the world. Go look it up. Businesses across the world, over 90% don't exist in 5 years. Let's talk about restaurants. Restaurants have like a 95% failure rate over a 5-year period. Grand opening, grand closing. Clothing stores, over 90% failure rate. Grand opening, grand closing. You've seen it throughout your neighborhood. You've seen it in your malls. Business in general has a high failure rate. That's what makes it so rewarding for the 8% who do make it. Because if everyone was a withdrawer, there wouldn't be much money for each withdrawer to take. This is profitable because it has a 92% failure rate. This changes lives because it has a 92% failure rate. Because 92% deposit, making the money available enormous for the 8%. You don't want it to be a higher success rate. You don't want a lot of people to get this. You don't want to say, oh, I'm a trader, and 1,000 people scream, that's not important. Everybody's a trader. I'm a successful trader too. You don't want it to be easy. You want it to be hard. You want this to have a high failure rate. You want there to be more depositors than withdrawers. That's where the big money is. It's supposed to be hard. It's supposed to be difficult. And so you have to ask yourself, do I have what it takes to do what I know I should do? Do I have what it takes to be disciplined? Do I have what it takes to take my stop when it's necessary to take my stop? Will I enter when I'm supposed to enter? Will I take profits when I'm supposed to take profits? Will I not break the laws, like trade with the 20, not against it? Will I do what I'm supposed to do? Do I have what it takes to become disciplined, to become responsible? Because if you don't, you will be one of the 92%. It is my view that everyone who can should try to give this an opportunity, because it is the best business in the world. There is no other activity that offers this level of freedom and independence. Lawyers don't have it. Doctors don't have it. You think doctors today during this pandemic are free? You think they want to be there serving? You think they want to be risking their lives right now? They're not free. You're free as a trader. I'm free. That's real freedom. Some of the highest paid professions are not free. You're free as a trader, as independent as they come, and no one can ever take it away from you. So I say you put your 3 to 5 years in starting now, because 3 to 5 years is coming, whether you know it or not, whether you think it or not, whether you believe it or not. It's coming. Why not let the next 3 years come and you be a master? Or the next 5 years, or however long it's going to take. Start now. I promise you, I will dedicate every waking hour of my work day to making you better, because if I don't, you lose my money, not yours. So this relationship keeps us honest. Now, like all businesses, there is a cost, guys. And to be honest with you, I wish there was a way I could give this opportunity away for free. And I would. But I can't. It's business. It takes money to support you. It takes money to develop you over your 3 years, 5 years, or however long it's going to take. And so, there is a cost. And what that cost does for me is not only to help me support you during your developmental period and pay your bills while you're developing, it also helps me determine who's really serious and who's not. And who would rather put money into, I don't know, a boob job, than in a future potential, something that has the potential of a future like this? Who would rather go put their money on some other silly thing. So it helps me filter out those who are not as serious-minded. Anyway, let us go. This opportunity cost $3,000 for everything. Everything involves self-start and the live trading camp. These are the only two things you will ever need. You're done. For $3,000, you are in this business forever. For $3,000, you are fully educated, fully trained every single day of your life, and it never stops until you die or until you quit. This program doesn't have an expiration date. Your funding is for life. Your education is for life. Your training is for life. There is never a day we are not training you. Year after year after year after year. $3,000 one time, and you're in with it all. Now, I know that in many locations, this is a very, very steep amount. I get it. But it used to be $15,000. I have thousands of traders that paid $15,000 for this. Why have I dropped it that way? Because I began taking my program to other areas of the world outside of the United States. But the vast majority of my traders there paid $15,000. You can ask them. So $3,000 for what many traders paid $15,000. One price, you're done for life. Full funding, full training every day, training sessions with me every single month, several times a month, training sessions every single day with some of the top traders in this industry, in this business. And you'll never, ever have to put a single dime of your capital at risk in the markets. Never, and you shouldn't. Now, if you can't do the combo with both of these things, because this is where I take you and make you a 20-minute trading expert. You need that. I want you to have my number one skill, what I became famous for. I want to transfer that to every single trader of mine. So this is more of all of the tactics and techniques that will make you a full, complete, rounded trader. But this is the specialty. Every trader needs a specialty. And so with the full, rounded trader and the specialty, there's nothing else needed. Now guys, look, take this $3,000 and let's break that up over 5 years. What is it? Break it up into a daily cost over 5 years. So there's 365 days a year times 5, right? Do it. And then divide that into that number. It's a cup of coffee. That's how I want you to look at this. Don't look at cost, look at value. For a cup of coffee a day over the next 5 years, you can potentially change your life forever and be in the best business in the world. Now, if you can't do the full package, the combo, then I suggest you start here. Now your cost just became $1,700. This gets you the funding, the education every day for life, the 2 days with me online where I'm covering every single tactic and technique, and you can take that over and over and over and over and over again forever. Breakout training sessions every day, trading live with some of the best traders in this business every day, side by side every day, watching what they do, following what they do. Training sessions with me several times a month, every single month, forever. $1,700 divided by 365 days over 3 years. It's not even a cup of coffee. Not a Starbucks one anyway. It's pennies. But if you can't even do the self-start, then take in the live trading first, the live trading camp. Let's get that 20-minute specialty in. And when you can, you'll add the self-start later. All right, your cost is $1,300. Now I know still, these are times that are not very easy. I understand that. But it makes it more pressing as far as I'm concerned. To work on something that gives you the skill to be independent and free of these things that can knock you out of the box. Now, for those of you who are really serious, I'm going to give you 1 week. 1 week to commit. That's right, 1 week. You got 1 week. And if you commit between now and next Friday at the end of business, if you join the family, join the team for life, I will give you these programs for this. You've got 1 week. Now your combo is $2,000. Break that down. Your live trading camp is $800. Your self-start is $1,500. Guys, it's less than a car. Do you know how quickly you can potentially make $1,500? $600 here, $400 there, $300 there. This is one trade sometimes. Not all the time, of course. When you think about the potential, this is nothing. These are nothing. But you've got to feel it. Something has to have been touched in your soul with this. And if not, you shouldn't do it. But I will tell you, my philosophy is that every intelligent human being should try their hand with this. This is the future traders. The jobless future with no boss, no company, no firings, no layoffs. Just total freedom. Laptop computer, internet connection. And it's growing leaps and bounds. So you got 1 week for the lowest price that I offer. But I will go one step further with you. One step further. I will go one step further. If you commit within that week, not only will you get these discounted prices, traders, I'm going to let you have 100% of the gains until you get every single penny of your investment back. Now listen to me. That's important. So once you start earning, every dollar is yours up to $2,000. You start sharing with me I get 60% only after you have made this program absolutely free to yourself. So if you have bought in at $2,000, you get the first $2,000 without sharing a single penny. Once you have made this program absolutely free, and if you do the right thing, you can, this program costs $0. And we become partners after you get every single penny of your investment back. Now, who does that? I'm not really in this for your upfront investment. I've got to keep the lights on. And yes, you cost money. in the beginning. But I will tell you that I am willing to give it all back to you. Just earn it. You can earn every single penny back. You can look at it like a loan to me. So your goal should be, number one, get the training. Number two, graduate. Make that $3,000. Number three, get your money back. Number four, make us a freaking fortune. 4 goals. And that's extraordinarily fair. This should motivate you to be disciplined, to do the right thing, because you can get it all back. And that is in writing. But I've got one more thing for you. One more. One more thing. Those of you who sign up by Friday of next week, not only will you get these prices, and I promise you the prices will go to the regular prices after Friday. I promise you. Not only will you get these prices if you sign up by Friday, I'm going to give you the 60%. And I will take the 40%. You are going to be the majority partner. You're going to make the biggest part of the profits. I will make the smallest part. I want you motivated. I want you driven every single day. I want you working on this every single day to get there. And so I am putting these incentives in front of you. Become a part of the family by Friday. Get these discounted prices. Work on getting all of your money back and have 60% of the business. I will take 40%. And nothing could be more fair than that. Guys, there are people out here selling trading programs for $50,000 and then sending you on your way with a pat on your back. There are people selling $5,000 training programs and would never put a single penny of their money at risk on you. Think about it. Look at the opportunity. It's one of the rarest ones in this business. I feel so explicitly confident in my ability to train you and get you there that I'm willing to risk my own capital on you. And if you lose, it's not your loss. It's my loss. There are very few people in this industry willing to do that. And there are very few people in this industry who have the money to do that anyway. So this is your opportunity, traders. And it could not be a better time than now to start this. I want you all to know that I know there could be many other things you could be doing right now, like sitting on your couch or watching Netflix, playing with your dog, playing video games. But you're here with me. And that is something that I do not take lightly, traders. I want to thank you for taking out your time, which is the most precious commodity you have. I want to thank you for being here, especially those who've lasted through this long marathon of a training session. Every time I am offered the opportunity to step up to a mic, I do my very best to try to share something that I think is life-changing, to try to share something that I think that many can walk away with and utilize for the rest of their lives, whether they join me or not. And I truly hope today that I've done that in your eyes. I want to thank you once again for being here, and I'm looking forward to at least a small number of you joining the family. Thank you all. I hope you've learned something, and I strongly encourage that you use today what I've shared with you. Thank you, Thank you. Thank you, traders. Boom! Yeah! Love it.